All right. Hello, everybody. Welcome back to another episode of the Market Close. We got earnings, folks. We got a lot of earnings. I'm here early because we're getting started with the coverage, but we're going to be here for the next couple hours. We got Apple and we got Amazon. But outside of Apple and Amazon, we also have a lot of other companies that we're looking at today. It's going to be wild. It's going to be madness when the bell rings. MicroStrategy, Reddit, Airbnb, Square or Block, Duolingo, Big Bear AI, Twilio, Atlassian, Instacart, Roku, GoDaddy, and then you got Apple and Amazon. It is going to be a pretty strong day. There it is right there. Thank you, I'm beneficial. Lots and lots of earnings. We've got a lot to look at, a lot to discuss, and Apple and Amazon are going to be the big ones. Apple and Amazon are going to be the big ones. They are going to determine the trajectory of this market. I mean, realistically, they're kind of leading up to NVIDIA. We already have Microsoft's cloud numbers, Google's cloud numbers. AWS should be the story. However, both of these companies uniquely are affected by tariffs. Amazon sells a lot of stuff from China, and Apple has their entire supply chain in China. So those are going to be very important companies that we look at today. But this is the watch list. Thank you, everybody, for being here. This is the watch list for today. Reddit, Amazon, Apple, Roku, Big Bear AI, Duolingo, Airbnb, Block, Twilio, Cart, MicroStrategy, and Team. It is going to be a big day for earnings. And we're going to get into it. All right. For all the people asking about the apartment, dude, everyone is so curious. We found it. Dude, I could not have asked for a better experience. It was, I don't even know what to say, bro. I filled out my application. I'm probably doing the security deposit on Sunday. We got it, dude. I don't even know how to explain it. First of all, first of all, I walk in, right, and I'm waiting for the tour guide. It's this hot ass chick. She's probably like 31 or 30, and she's like, all right, let me show you around. And I'm like, oh, this is gonna be fun. And the way she talked, bro, was so seductive. Like, you'd ask her a basic question, and the way, the intonation of her voice, I was like, oh my goodness, this is incredible. And then, so before we see the apartment, she shows me everything. I mean, like, the amenities are ridiculous, bro. When I mean ridiculous, I mean ridiculous. They have a podcast studio inside of the apartment complex. Like, you know, I was thinking I can make one of the bedrooms in the 2-bedroom in apartment. They have an entire recording, so like a legit professional recording studio. Multiple pools, multiple hot tubs. You have their own sauna. They have a freaking cold plunge machine. They've got like 17 different private offices. They have an entire movie theater. I mean, it was insane. So the only thing I needed left was the view. And it's not a New York skyline view, so it's not the World Trade Center. That's what I really want, but it's a hell of a view. And so I think, you know, we'll work up to the skyline. Maybe, you know, I'm 27, maybe when we're 30, maybe 31, we'll get that skyline view. That's going to take some time. Those tend to be just, you got to pay like, you know, a lot more to get those views. And I wanted to get it in my price budget, not getting it right now. Also, it's just really competitive in the market in Jersey City. But 17th floor, great view. I don't want to show you guys any pictures. I'm not showing anything. I want to keep it a surprise. I mean, the view of the apartment is so good. I don't even know if we want to keep the bricks in the background because the view itself behind me would be so cool every morning. So I don't know. We'll figure it out. But it was good. It was really good. And she was just, you know, she was awesome. She was great. Her energy was great. She was just so awesome at showing me around. And you know, when I said, wow, I mean, like, you're good at your job at selling. She's like, well, I don't really need to sell it. She's like, you're already sold. You know, she's like the 2-bedroom went off the wait list yesterday night. And thankfully I answered my text messages this morning during the open, because if I had not, it would have been gone. Like, that's how freaking exclusive this place is. And it's kind of lucky right here that I responded in the morning and then she was free. She doesn't work on Wednesdays and Tuesdays. So like, it just happened to work out. And then I booked it. I said, nope, I'm in. Give it to me. Let's get it done. So there we go. We got the job done. Very excited to show you guys. Looks like August we are moving in officially. And yeah, it'll be fun. It'll be really fun. Jersey City. We're going to be in Jersey City. It is going to be a 2-bedroom. The 2-bedroom just has like the other stuff. The 2-bedroom has like this. It has the right curvature of the view that I need, or that I was like envisioning in my mind. And so there you go. So I'll get more updates on you guys later, but it was pretty incredible. And I just joined in. Can already tell Mitt's getting hustled by a cute girl. No, and well, here's the other thing. She also does a lot of community events. So one of the things about this area is that it's so community driven. So like there's wine nights and there's volleyball stuff. There's like, they do all these things like every other day there's this event. So she's like, you're just going to love it here because there's so many people. Most of the people in the apartment are millennials. So there's, you know, there's a host of people in their late 20s, early 30s, and it'll be cool. It'll be cool. But more importantly, let me put this poll in the chat. I'm going to do what you guys say. It is up to you. Buy 100 shares of Amazon, yes or no? Are we doing it? Yes or no? We got 5 minutes. Yes or no? Are we doing it? Buy 100 shares of Amazon. I don't even know if we end up bag holding Amazon. It's freaking Amazon. Like, are we really going to be that upset? But also, if AWS crushes it, it's already up 4% on the day. So I don't know. So that is the real question that we have to figure out. And then we'll get into earnings. But it was fun, dude. It was really cool. Like, I fell in love with the place basically within a couple minutes. I didn't even see the apartment, just the amenities alone. I've never seen a place like this. The building's freaking huge. There's 30 floors. And so it's this massive building. The community with it, like all the access to different things that you need, and the bars and the clubs, and all that, it's all in this integrated community. And I'm like, holy crap, I think this is it. And then I see the view from the apartment, and I'm like, no, this is really it. We're getting the job done here. So yeah, it looks like cross your fingers, but we should be getting ready for an August move up. And it's not Bisbee and Newport, dude. The Newport rentals, I wanted that to initially be the place, but they suck. Newport rentals are not luxury. If you're in Jersey City, you'll know Newport rentals. They look like they're luxury. They're not luxury. They have good views because they're close to the skyline, but they're not really like luxury apartments. This one felt like luxury, dude. It felt amazing. So it's gonna be awesome. It's going to be super, super awesome, and we'll get the job done. Now, Robinhood, unfortunately, did not have the best day. I did get rid of all my hood options. I think I made in total like $2,000 selling the $9,500 spreads, but $46.99 on the day. I mean, it is what it is, right? Down about 4.3%. The Vlad interview did get posted. We'll take a look at that later and see what he had to say. But basically, he was saying the same stuff he always says, which is that Robinhood's crushing it. Their user base is growing. The net deposits are amazing. So I don't know why this one went down 4%. I don't think it needed to gap up 10%. I don't think it needed to go down 5%, but that's what we're looking at right here. You got Amazon right here, 199. You got Apple coming up soon at 214. Apple actually gapping up a little bit right here, 1%. Max 7 in general. Meta kept its pump up 5%, and Microsoft down a little bit. It was 10%. Now it's 8.3%. Tesla still up on the day, 284. And then NVIDIA, 112. There was a headline about NVIDIA chips not being banned as heavily in the UAE. So that pumped it up a little bit. But outside of that, 112.60 is what we got on NVIDIA. I'm not going to say the price of the rent. I don't want to say the price of the rent. Let's just say this. The price of the rent is why I stayed home for the past 5 years. Could have moved out 5 years ago and paid, a cheap rent, but just to have the security and the privacy of being on my own. But I stayed my ass at home, worked hard, grinded, built what I built. And, the grind has not stopped, but it has put me in a position where I can afford the rent. And, with the taxes and my accountant and being able to write some of it off, it is actually beneficial to have a little bit of a higher rent to be able to offset on my taxes. So I don't want to say the price of the rent, but it's up there. It's like, I never thought I'd be paying this month for rent, but I'm paying for it. But again, I don't think of it as rent. I think of it as an investment in my media career. I got to be close to the city. It's a 15-minute trade ride from New York. So all the financial people that I want to interview are in New York. For them to be able to easily come here instead of some random suburb in New Jersey, like, it's not possible to do it in this area. We got to be close to the city. And so to me, it's just an investment in my career. So it's going to be exciting. It's going to be exciting. 74% of you say yes on freaking Amazon. All right, here we go. I guess we're doing it. My only thesis on Amazon here is AWS. I think the tariff stuff is not going to be good for them. But if Microsoft crushed it the way they did, 35% year-over-year growth compared to 31% last year or last quarter, hopefully that's enough for AWS to crush. And if it drops, and it's Amazon. All right, we're holding Amazon. So here's what I'm gonna do. I'm gonna buy it on my phone, and then it should pop up on Legend right here. So you guys should be able to see it. We are using Robinhood Legend now. They added a bunch of stuff that works for me, and so we're able to use it. All right, so here we go. 100 shares. Let's throw it in. We're basically taking that Robinhood spread money, putting it there. Yep, there it goes. Your market order to buy 100 shares of Amazon was filled. All right, we're in at 190.51. 190.51. And let's hope that Mr. Jassy is able to pump this up. What else do we have? Tesla is not reporting today. We do have Big Bear AI. So all these other companies, I mean, I have thoughts on them, so I'll give my thoughts, but I don't follow them as aggressively. Let me know which one of these you guys own. Roku, Big Bear, Duolingo, Airbnb, XYZ, Twilio, Cart, MicroStrategy, Atlassian. We've got a lot of these on the board right here. I now own Amazon, so there you go. We got Amazon here. Airbnb always like has a good quarter and then dumps. Maybe today's different. XYZ, this one, I've never understood the thesis on this. Maybe it does well with Bitcoin. MicroStrategy, I don't know what will cause it to pump. It was at 400 in the morning. Now it's at 385. Apple, I'm worried about because I think they have a legit tariff issue. But I also think the market, you know, if Apple puts up the numbers that they usually put up, the market's not going to care. It's freaking Apple. They're not going to necessarily punish them to such a degree. Duolingo, user growth is incredible. Big Bear AI, I don't know. I mean, they have some government contracts, but realistically, they've got to show some serious growth. I don't think they're profitable. Twilio, this one's done well from $40 last year, but I guess they've just got to beat on the top and bottom to see what they do. They did oust one of their founders last year, and so they replaced him with a suit. And then Roku is Roku. We got to see what Roku can do to get some momentum. A lot of you guys, wait, is Reddit today? Yeah, we do have Reddit. Okay, Reddit. So 119.74. Reddit is going to be interesting because Snapchat didn't give guidance on ads. Meta did. Reddit, if they give guidance, they have good user growth. They're profitable. I think Reddit should do okay. Now, Reddit still is kind of expensive here. It's not like Reddit's super cheap, but I think it depends kind of on the core growth outlook to get Reddit to give some momentum. I see some Big Bear AIs in the chat. I see a lot of MicroStrategies. I see some Reddits. Does Riot report today? I'll put Riot on there if we have Riot reporting. Oh, we do. We have Riot and we also have GoDaddy. So let me put up those two. Riot and GoDaddy. Okay, Riot, GoDaddy. I think we have a couple others too. We have a bunch of these names today, dude. We have freaking Lumen. Lumen is the freaking the satellite company, right? If I'm not wrong, space. All right, so we'll put that up there. We got a bunch of these Lumen Technologies, yeah. That we are going to be looking at. Where's the S&P? We were up at 1.5% of the day. Now it's up 1%. I'll take 1%. I will still take 1%. But we just got to see where it goes from there. Savage, thank you for the $10 super chat. Thoughts on the Amazon quadruple top at 191.80? Well, I hope we can get above 191.80, given I just bought 100 shares. So yeah, I have no thoughts on it. I just hope we have a good quarter and we crush. That's it. That is it. And we're going to see how it plays out. Palantir. Whoa, Palantir's down 1.4. All right, 116.72. Yeah, Palantir did hit 120 this morning, but could not keep it up. And then Hood, again, it is what it is, dude. 46.64. I think this is kind of disrespectful by the street, but I also understand in the morning, my argument here was that Hood is volatile because trading volumes will be volatile. And the biggest thing no one's talking about is net interest will go down when the Fed cuts rates. And so, you know, that's going to hurt Hood. And so the market's kind of discounting that back. I think there's ways to overlook that, but it is what it is. That's how the market's kind of thinking of it right now. And eventually, I think the more growth they put up, they should be able to overcome that right here. Let's hear a little bit from Mike Wilson. We got 5 minutes into the close, see what he's thinking about big tech. And as we have earnings coming up, and then we will keep going from there.
Five, you forget something, it's on you, not me. But what's the four?
Yeah, so I mean, it's not all four, but we need to see some combination of these four things. I'd say the first one is some deal on tariffs with China.
Okay.
That's the one that matters.
All right, check.
Okay.
We'll
Number
see.
two, dovish Fed.
Okay.
Where they kind of get off the stick. Okay. Number three, we see rates come down in a more meaningful way, the back end of the market, without growth really deteriorating. Okay. And then the fourth one, which is probably the most important for stocks, is earnings revisions. Earnings revisions have been on a downward trajectory for quite a while, but if that were to turn up, so maybe one or two of those together, we could see a breakout of this range we've been stuck in.
Does that suggest that you're not yet convinced that this rally back, 8 in a row, I think we're going today on the S&P, is sustainable?
Well, I would say this, the lows could be in. Okay, we priced a lot of damage at 4,800 on April 7th. There was a capitulatory move. I think the wild card now is, are we going to have a recession? Okay, and I think, our economists would say it's a coin toss. It's a 50-50. I think most of your guests are probably in the same boat. I mean, I think most commentators, we just don't know. And if you don't get a recession, the lows are in, okay, for the year.
And we got some bad jobs data this morning. So when he says 50-50, I agree. I mean, if the Fed doesn't step in or Trump doesn't walk back the tariffs, realistically, if the jobs data continues to be the way it is, we're going to have a recession. But it is manageable. It's just a question of how manageable it is as we get into the latter part of the year.
if we get a recession, you probably got to do a full retest, maybe a slight break. Okay. And that would be a labor cycle. That's the only way to define a recession. It's a labor cycle. All this stuff about negative GDP, I don't care about that. I care about, do companies start laying employees off in a way where you get a next round of revisions that become more serious?
We both know, for obvious reasons, we're not going to have an answer to that question for a while. Does that mean that we just chop around things? We may have some volatility come back. We feel like it's been this nice little sanguine move higher. Everybody's feeling good. As Adam Parker was just saying, everybody was so negative. Now everybody's feeling so much better about everything. But are we due just for more choppy?
That's basically our call. It's a range trade, right? So the low end of the range is sort of 5,000 to 5,200. Upper end of the range now is 5,500 to 56.
All right, are we tanking into the close? You guys are saying we're tanking into the close. S&P. Oh yeah, look at that red candle. Oh boy. Wait, so where's Amazon then with that red candle? Amazon 189. Oh boy, got a little tanky tank into the close. I don't see the headline for why that's happening. Yesterday was the opposite, right? Yesterday it freaking. By the way, guys, if you follow me into these trades, I do them for fun, okay? And I'm bullish on Amazon because it's freaking Amazon, so it's whatever, right? If it tanks, it tanks. I'll sell cover calls against it. So please don't follow me into this if you can't afford to hold 100 shares of Amazon if it tanks 10%, because then you're just going to be mad at me for following me. So if you're going to actually follow me into this, then do it because you don't mind owning Amazon. Like, I don't mind owning it. So that's why I'm doing it. Reddit right here. I wouldn't do, should I buy 100 shares of Roku? Because I'm not buying it regardless, right? Amazon right here, 189. I don't know what the headline is. We got 30 seconds into the close. We went from 1.5 to 1.6. Now we're 0.7 on the S&P. That's weird, eh? That's freaking weird. Why is that happening? Yesterday was the opposite. Yesterday we were up 0.5 going into the close. I don't see the reason. All right, market close. I think Amazon usually is quick and Apple takes time. So Amazon's the big one that we're going to see pretty quickly. Wow, yeah, S&P still tanking. Damn, that's weird. I guess algos, I don't know. Yesterday, Microsoft was getting freaking oldest call premium in the money going into it. And now I guess we're seeing some. Tesla just went red, 280 right here on Tesla. Either we're getting some news after hours or someone thinks Amazon and Apple are going to do horrible. But it's time to see what happens. All right, here we go. Thursday, May 1st, 4 p.m. It's going to be a absolute madness of a bell as we get earnings. We got about 14 companies. Here we go. The stock market is now closed. All right, we got a lot of companies. There's your earnings watch list right there. Reddit, Amazon, Apple, Roku, Big Bear AI, Duolingo, Airbnb, XYZ, Twilio, Cart, MicroStrategy, Team, Riot, GoDaddy, and Lumen. Trump did tweet that he's going to be sanctioning companies that get Iranian oil, which is, obviously China. But that tweet came out like an hour and a half ago. So I don't know why that would be the reason for that massive dump into the close. Yeah, he said all purchases of Iranian oil or petrochemical products must stop now. Any country or person who buys any amount of oil or petrochemicals from Iran will be subject to immediately secondary sanctions. I mean, so I guess we're sanctioning China now, because they buy some Iranian oil. But all right, here we go. Amazon 192 after hours. That one is now down. That was up a little bit. Now it's down. That one's moving like crazy. Let's see if their numbers are out. They should be out very soon. Apple's going to take a little bit more time. Amazon, now it's flat, but it's not red. But it's not red yet after hours. Now it's back to 190. Wow, 192 to 186, right back to 190. This one's going to be volatile. I don't even think we have numbers. I think the market's just like going back and forth on this one. Did we beat? Yeah, they beat. Hold on. I think they beat. It's going flat after hours, but I think we got a beat on Amazon. How good is the beat? Yup, we got it. All right, here we go. 159 versus 136, 17% EPS beat. Not bad. 155.6 versus 155.12 billion on revenues. EPS 62% year over year. Revenue up 9% year over year. EPS down 15% quarter over quarter. Revenue down 17% quarter over quarter. Does the market love it? The market, well, I mean, I wouldn't say it's tanking. It's down 1% after hours. It looks like it wants to keep tanking. Now, granted, this happened last time and then it reversed on the call because Jassy knows how to talk. But it is down from 190 where it was basically at the market close. So now you got down 1.49%. All right, that's what we got on Amazon. Let's see if we can get more details on this one. Apple, I think, is going to take a little bit before Apple comes out. It's a 17% beat, though. Like, that's not horrible. Dude, what is this MicroStrategy number? Hold on. What is this, Micro? Look at this thing. What is this? Freaking, the street wanted negative 11 cents. They lost negative $16.49. They missed by 14,000%. This is stupid. Oh, you guys think the hood percentage is wrong? Why is the hood percentage wrong? Hold on. Let me check on something else. Amazon. Oh yeah, it is down 4%. Oh, that's weird. I feel like the calculation right there. It says, you see it right there. It says negative 1%, right? Negative 1.2. Either my settings are wrong or that. Yeah, that setting is wrong. That setting is completely wrong. It's not negative 0.46. That's wrong. Okay, so Legend was having some issues this morning, so that was kind of weird. But okay, so Amazon's right here down 4%. Sorry, the reason I was saying 1% was because I was looking at the wrong number. MicroStrategy, I think this has to do with their accounting laws for why they missed EPS by 14,000%. I don't think that really makes a lot of sense. But revenues right here, 111 versus 116, missed by 5% on revenues, which is not that bad. It includes today. How do we get it to only show after hours then? How do we get it to only show after hours? That's weird. It wasn't doing that yesterday, though. That's weird. I feel like I messed up on a setting right there or something. Okay, but that's what we have on Amazon. Amazon, again, down about 1 point, or down more than 1%, down about 4%. Yeah, you can definitely call that a dump. You can definitely call that a dump there right now. AWS growth miss. Okay, AWS miss. Well, let me pull this up. Let me get the actual numbers on Amazon. Here we go. I think AWS is the story right here, and that's why the street is a bit more upset. Let's pull this up right now.
11.2% operating margin on EPS, at least. Earnings and revenue stronger than expected. It looks like slightly light here on operating income. And then the AWS number, the growth rate, that is 17%. Street was looking for 17.6%. And the whisper number, a lot of analysts had expected that to be even higher. You see shares reacting sharply, down almost 5% on that news. I mentioned the operating income guidance. They're looking for between 13 billion and 17.5 billion. That was versus street estimates of 17.6 billion. So light there as well. Q2 revenue, they're looking for the current quarter between 159 billion to 164. That one is in line there. We're still looking through the numbers, guys, but a miss on AWS growth, and that appears to be what's hitting shares here. But we'll bring you more as we keep digging.
Well, that's not good. That's not good. I'm going to use Webull right now because Robinhood is messing up the percentages. Again, Legend was glitching today, so I need to get the accurate percentages. Amazon now down 5%. Did you guys say pump or dump on the poll? Hold on. Did you guys pull a Netflix on me? Do we have pump or dump? It better not say majority dump, bro. It's going to be so bad. 75% of you said let's buy these shares. And we've got... Okay, 61% said pump. Okay, so we all thought it would go up. We all thought it would pump a little bit. It's okay. It's freaking Amazon. How bad is the AWS miss, though? I think that's the broader question right here. And that will determine if this is an easy buy the dip or if this is scary. That is weird, though. If Azure's not missing, I don't know why Amazon's missing. Right? Where's the S&P after hours? We'll get to the other earnings in a second. S&P, nasty, down 0.3. Oh, I don't even want to check NVIDIA. NVIDIA is down 0.6. Tessie's down 0.7, Robinhood's flat, GameStop's down 0.36, Rocket Lab down 0.36. Netflix was almost at all-time highs today. That's down a little bit after hours. And then Palantir down 0.5% as well as the entire market's getting hit. All right, Atlassian, you guys are saying those earnings are out. Let me pull that up. Team, oh boy, that's down 12%. Atlassian, there you go. That's nasty. Down 12.8%. Where's MicroStrategy real quick? MicroStrategy is also down 0.45. Again, even though they missed by 14,000% on EPS, it doesn't really matter because it's rooted in Bitcoin, so that's not going to make a difference. But Team Atlassian right there, down 12%. Let me see what other earnings we have right here. Then we'll get deeper into Amazon's numbers and try to run through the actual details here on what's going on. Reddit's up 13%. All right, hold on. Okay, so I have Airbnb numbers. Let me show you that first, and then we'll do Reddit. Airbnb, not a bad quarter. Beat by 4% EPS, 24 versus 23 cents. 2.2 versus 2.26 billion on revenue. That's a beat by about 1%. Airbnb is down 4% after hours. This one every time finds a way to tank. Reddit's up 13, which is nice. Don't know why. Don't have their numbers yet. But Reddit is up 13. And then Amazon down 4.78 or no, 5.78%. Now, let me try to get the deeper numbers on Amazon here. Let's try to go deeper. Then we'll get into the rest of what we got going on now. Down 4%. Amazon. Let's pull up their IR and see what they have. All right, cool. Here we go. Amazon. We'll get into all the other ones in a second. Amazon. Here we go. Net sales increased 9% to $155 billion. Operating income increased to $18.4 billion compared to $15.3 billion, and net income increased to $17.1 billion of profits. Free cash flow decreased to $25.9 billion compared to $50 billion on the trailing 12 months. Jassy says, we're pleased with the start of 2025, especially our pace of innovation and progress in continuing to improve customer experiences. From Alexa Plus to another delivery speed record for our Prime members to our new Terranium 2 chips and Bedrock model expansion that make it easier for AWS customers to train models and run inference more flexibly and cost effectively, to our first Project Cooper satellite successfully launching into low Earth orbit. In our quest, we're continuing to find meaningful ways to make customer lives easier. Okay, no one cares about any of that. Where's AWS? Where is AWS? Let me get the deck. He thinks we care about freaking satellites, dude. No one gives a shit. All right, here's what I'm actually looking for. Reddit. Oh, wow. Reddit deserves to be up. Look at that. 13 cents versus 2 cents expected. 392 versus 370 million. Look at that. That's why Reddit's up 13% right there. Massive beat on profitability. That's a 700% beat on profitability, or a 600% beat. And then on revenues, about a 30 million beat as well. That's why Reddit is up 13%. All right, AWS. Let's see what we've got right here. First of all, what's their operating income margin? That one was up to 11. We are at, oh, wow, 11.8. Hold on, that's not horrible. Look at that. That was freaking below 10 back in Q4 2023. That's now almost 12, 11.8%. Now, granted, this is pre-tariffs, so we have to remember that. But still, that's not horrible. And then Amazon Web Services is the big one. AWS grew 17%. I think the street wanted 19%. If I'm not wrong on my expectations, I'm pretty sure they wanted 19%. Yeah, that's a 2% miss. That's not, you can't miss on AWS, not when Microsoft's doing 35%. That just means Microsoft's kicking Amazon's butt here. Now, granted, we're exchanging 1 or 2%. It's not that big of a deal. But in terms of the actual short-term price movement, that would explain it. North America up 8%, $92 billion worth of stuff they sold. International segments 5%, $33.3 billion. AWS 17% to $29.3 billion. Operating income 18.4 compared to 15.3. And then the other metrics are pretty much the same as always. Overall revenue was up 9% year over year to $155 billion compared to $143 first quarter of 2024. 17.6 was the target. Wow, that means the street's really upset. I thought it was 19%. The street wanted 17.6% growth. They come in at 17 and they tank them 5%. It's a volatile market. You can't miss on some of these numbers. It's recovering a little bit though. It was down almost 5.5. Now it's down 3.7. I mean, realistically, that 0.6, I don't think that's the difference maker between 180 or 190 on Amazon. Reddit up 18%. Congrats to whoever at Reddit. My goodness. Look at that, dude. Look at that candle on Reddit. Holy moly. 117 to 140. If you had calls, you've done well on Reddit. All right, let's get some other companies here. We got Apple. I think usually Apple's at 4:30. So we'll get Apple soon. But let me see what other companies we've got, because we got a bunch of them as well. Atlassian, or let's do Twilio. Twilio beat by 19% on EPS. This is all those notifications you get when you try to log into something and you need a code. All of that comes from Twilio. They're up 7% after hours. 114 versus 96 on EPS. That's a 20% beat. And then 1.17 versus 1.14 billion. That's a 3% beat on revenues. Double beat for Twilio. Where's Big Bear AI? Let's see. Big Bear AI is up 1.7. Let's see if I can get their numbers. I don't have them yet. I'm using Webull right now because Legend has a glitch. It's been glitching all day, and it's not showing the correct after-hour percentage moves. So that's why we're using Webull, just to get the accurate percentage moves. Oh my goodness, Block. Hold on. Big Bear AI, I don't see it yet. Block, what is this, bro? What is this garbage? Hold on. What did Dorsey just show to everybody? 56 cents on EPS, missed by 40%. Either the analysts were too aggressive or they really had a bad quarter. Revenue missed by about 400 million, 5.7 billion versus 6.18 billion. Dude, what is going on? Block should be down 12%. What is this, dude? I've never been like super bearish Block. I've just not liked Jack Dorsey as a CEO. I think he's an incredible innovator, but he's not my favorite CEO. Just how he handled Twitter. I don't think he cared much about the actual business itself. And the guy's obsessed with freaking Bitcoin, and Block is like his Bitcoin project. But Bitcoin has like gone to the moon from like 15 to 100K, and Block has done nothing. So there's been so many other ways to play crypto versus Block. Down 12% right here. I'm just curious why they missed so badly. I'm just curious why they missed so bad. I cannot call Steve. He's at work. We'll talk to him later. Also, I know he owns Block, but trust me, guys, he doesn't talk about it every day. So I doubt he really cares that much. I don't even know how big his position is in Block. So we'll see what he has to say later when I get him on the phone. But I don't know. I haven't heard him talk about Block in like a month. So I don't think he cares that much. But he's been mainly just buying NVIDIA from here. NVIDIA right here down about 0.45% after hours. Where is Amazon? Amazon's down 3. Amazon is down 3. Big Bear, I don't see Big Bear's earnings yet. What else do we have? We had Twilio, we had Airbnb. Oh, Roku, we got Roku. Okay, 27% beat. This company is still not profitable, lost 19 cents a share. This is Kathy's third largest holding. Roku is flat after hours, and revenue 1.02 billion versus 1.01. That beat by 1%. Okay, there we go. MicroStrategy is also flat. Doesn't really matter for them. Again, their earnings are inconsequential. Bitcoin is really the only thing that controls them. Does Monster Energy have earnings today? Monster? I'll try to see if I can get Monster's numbers, but they're flat right now after hours. Amazon right here down just about 3% after the bell. Here's the Airbnb numbers, and then we'll keep going from there. Apple is not out yet. Apple's not out yet. Apple should be out soon, 4:30, but not out yet.
Airbnb results are out, and Deirdre Bosa has those numbers for us. Hi, Dee.
Hey, Morgan. So Airbnb shares, they're down more than 4.5%. EPS coming in line with expectations. 24 cents was expected. That's what came out of the quarter. Revenue slight beat here, 2.27 billion versus 2.26 billion expected. We'll call that in line. Gross booking value up 7% year over year. Outlook a little bit light, but mostly in line. Airbnb is giving a range of $2.99 billion to $3.05. The street was expecting $3.04 billion. But here's what really matters, guys. The travel trends commentary, how they're seeing things in Q2 so far. Seeing some softness on the U.S. side on a sequential and a year-over-year basis. Believe that's driven by macro uncertainty. They say that inbound travelers coming to the U.S. are coming down, but those like Canadians are...
Wow. Inbound travelers to the U.S. are coming down. Huh. I mean, it's not affecting Airbnb yet because they beat on the top and the bottom, but that is interesting to see. A little bit of travel. I mean, we saw that in the data already last week, but looks like Airbnb is confirming it here.
Choosing to travel to other places, saying near-term bookings remains relatively strong, but people aren't booking as much in advance. They're waiting and seeing. That said, guys, no change to full year guidance.
Okay, Big Bear is dumping. Big Bear is dumping. What do we got? BBAI down 6%. Okay, cool. Down 6%. There you go. There's your red candle on Big Bear. I'll try to get their numbers in a second. This one, again, is a ultra small cap. So it tends to not be profitable, doesn't have really good earnings, and that can obviously hurt a company like that. But let's see what the numbers like that. Look, Instacart is up, though. I've never used this product. 13% though, 13%. It's like Uber Eats for groceries. So Instacart doing its thing. Big Bear, the street wanting -6 cents and 36 million. I still don't have those numbers yet. I should get it in a second. But it looks like they missed on the top and the bottom here. And that's what's causing this pain. Again, if you're just joining Amazon, they beat EPS by 17%, which is incredible at their size and scope. But they missed on AWS by 0.6, and that's why the street's upset. So that's what we've got. Still don't have the Big Bear numbers. Where's Amazon? Are we bouncing? It's a little recovery. I mean, dude, realistically, I don't see any red flags in the quarter yet. I'm still looking at some of the numbers, but there's not like an argument to say this thing deserves to be down dramatically or anything. So this one, I think realistically, it's just like missed a small number and the street was mad. Nvidia's green after hours. Where's Reddit? Reddit right here, 16%. Reddit doing its thing, and then Nvidia going slightly green. Jassy is one of the best CEOs in the history of CEOs on earnings calls. Like, we're going to listen to him today. He is just phenomenal at explaining the long-term vision. I mean, just absolutely incredible. So when he talks, people tend to listen. We saw last quarter the stock reversed, and maybe we see that this time. Robinhood's up a little bit after hours. Tesla down 0.14, and then S&P down about 0.14 as well. Duolingo. Okay, let's look at Duolingo. Duolingo up 7%. This company somehow grows users like 60% every quarter. Duolingo is Rosetta Stone on steroids. That's how I think of them. They're basically a company that allows you to learn how to speak a different language. So this one, yeah, dude, every time, just incredible growth on Duolingo. Every time they figure out a way. Record number DAUs, surpassed 10 million paid subscribers, 38% year-over-year revenue growth. CEO says Q1 was an outstanding start to the year. We added more daily active users this quarter than in any other in history, highlighting the continued strength of our product. We also surpassed 10 million paid subscribers, 38% year-over-year growth, strong user momentum. As we look ahead, we're excited about the momentum we're seeing with Duolingo Max and its potential to drive both innovation and growth. Our investments in AI have also helped us accelerate content creation, and we believe we're just beginning to scratch the surface of what we see and what we can offer our users. Yeah, there you go. Duolingo, they deserve it. People love learning other languages. All right, here we go. Big Bear AI missed EPS. Wow. That means they had what? Negative 18 cents. Street wanted negative 16. Missed by 317%. Revenue by 4%. Year-over-year growth is solid. EPS is up 16.3%. Revenue is up 5%. That's a nasty miss on earnings per share, though. Yeah, look at that, dude. That is disgusting. Negative 25 cents versus negative 6. All right, that's what you got on Big Bear. It's not really that major AI play that I think, people really should care. I mean, honestly, that's Palantir. There's a lot of other AI names, but Palantir is the big one. So Big Bear got some government contracts. They pumped to 5 back in February. Got a lot of people excited about it. But I don't know if this is like a legit AI name to really care that deeply about. Big Bear right here, down about 7%. Currently right now, yeah, Reddit's up huge. GoDaddy, is GoDaddy up? This company's in the S&P 500, by the way. Believe it or not. GoDaddy. They are in the S&P 500, but Robinhood, for some reason, is not. GoDaddy, no, they're not up. They're flat. They're up 0.01%. Are you trolling me? They're flat. Apple's coming out in 10 minutes. Let me see GoDaddy's numbers. This is a website to buy domain names. That's their bread and butter. Don't have their numbers yet, but we'll get in a second. Atlassian got hit badly. Yes, Atlassian got hit badly. Team right here. This one always tends to tank. This is project management software. That's down 16%. And then Palantir after hours is slightly up about 0.3% here right now. Reddit, 19%. And then NVIDIA right here up 0.08% on the day. All right, let me get to Roku and then Square or Block. And let's take a look at those as well. All right, here's Block.
The Block reporting adjusted earnings of 56 cents a share, John, up 19% from a year ago, but that's not comparable to estimates due to a change in stock-based compensation accounting. Revenue, a big miss at $5.77 billion versus the $6.2 billion expected. Gross payment volume, money moving through Square and Cash App came in light at $56.8 billion. Though it is a profit beat on EBITDA. Now, Cash App gross profit was a bit softer than expected. CFO Amrita Ahuja cited lower inflows and muted tax season spending, but says that they expect a pickup later this year as its Borrow product expands nationwide with FDIC approval. Looking ahead, Block is cutting its full-year gross profit guidance, citing macro uncertainty.
That right there will do it. That right there will do it. Now, kind of feels like Snapchat. They're using tariffs to cut down their guidance. Like, why is Block uniquely affected by it? They're a payments processing company. Well, it's more peer-to-peer though than commerce. Like, you could say demand for commerce is going down like a PayPal, therefore they're lowering their guidance, but Block is more, send money to each other, not buy it on Block. So I don't know. That's an interesting one. Well, no, actually, no, hold on. So they have point of service. What am I saying? Point of service. Yeah. Yeah, literally their biggest product is point of sale merchant solutions. If you have demand going down in the broader economy for small businesses, there you go. They're not going to make it that many fees anymore off transactions.
Those shares down 12% in after-hours trading. Back to you.
All right, Mackenzie, thank you. We've got Roku and Reddit earnings out as well. Julia Borson has the numbers on both. Julia.
Hey, Morgan, let's start with Roku. Top and bottom line results better than expected. Revenue of $1.02 billion ahead of $1.01 billion estimates. Shares up about 2.5% on this news. Loss of 19 cents per share, better than the 27-cent loss per share analysts anticipated. For the second quarter, the company guiding to revenues of $1.07 billion, roughly in line with expectations, and adjusted EBITDA of $70 million, which is below the $76 million, which is the street account estimate. The company also reaffirming its full year adjusted EBITDA guidance. Now, as for economic uncertainty, Roku saying, quote, while tariff-related impacts to our devices segment remain difficult, we expect devices revenue and gross profit loss to remain consistent with 2024 levels. Roku also announcing an acquisition, is buying Friendly TV, a subscription streaming service with over 50 live TV channels. Now shifting gears over to Reddit. Reddit beating on the top and bottom lines, shares up 17% in after-hours trading. Revenues of $392 million, topping estimates of $370 million. Earnings of 13 cents per share, far ahead of the 2 cent per share estimates. The company reporting daily active uniques, 108.1 million, slightly ahead of estimates. And Reddit also guiding to stronger than expected second quarter revenue to a range of $410 million to $430 million, ahead of the consensus estimate of $396 million. I spoke to CEO Steve Huffman, who told me, quote, we're carrying momentum into Q2. This quarter is looking solid. It's hard for anybody to predict beyond that. But
so that's good. Reddit basically saying, hey, Q2's off to a good start. It's better than Snapchat. Snapchat didn't give you anything. And so that right there is probably why the street's excited about Reddit. So DAUs, 31%, 108 million people a day use Reddit. 61% revenue growth. That's, I mean, you got to admit, that's incredible. That's pretty damn incredible. Gross margins are 90.5%, and they are profitable at 26 million adjusted EBITDA with a 30% margin, which is also not bad. 400 million people use it weekly. 108 million people use it every day. I don't love the price of sales on this or the multiple, but it's a growth stock that is early in its growth. So if you pay up for that premium, you're going to get good growth. And then it's just a question of if the street actually respects it. We got about 6 minutes until Apple. 6 minutes until Apple. What do you guys think? Let's do the Apple pump or dump. So you guys said pump on Amazon. That one so far has not worked. How about Apple? Tim Cook, I think, should come out and says, you know what? We're just gonna buy back the entire company. Like, you know, if you guys want buybacks, all right, we'll just buy back everything. Like, if you guys want buybacks, let's just buy back. I mean, realistic. What is he gonna say? What is Tim Cook gonna say? Like, what else does Apple have? But again, in the midst of that, I think it's going to be a quarter that almost is an inconsequential quarter, as in I don't think they're down 10%. I don't think they're up 10%. Maybe that's 1 or 2, 3%. Duolingo right here up 8.2. But they're going to have to speak on the tariff volatility. They're going to have to talk about the AI vision that they have. The Vision Pro's done. And then it's just a question of, can they have enough buybacks to get that EPS growth to be, I think, at 13%, which is not horrible growth, but top line revenue is basically 0% at this point. 65% of you say dump on Apple. 65% say dump. Now, granted, Apple's the market, right? So Apple could have a crappy quarter and still not really dump because it's Apple. And we all just have to respect that. Amazon right here down 3.7%. Amazon is down for missing on AWS by 0.6%. 17.6 expectations, 17% they delivered. That's why it seems like Amazon is down. I don't see any other red flags. We're going to get CapEx guidance from Amazon on the call. They gave regular guidance in the report. CapEx on the call. We're expecting 100 billion. If they come up to 110 billion or something, that would be bullish for Nvidia. But we have to see. MicroStrategy, what's MSTR doing? It's up 0.74. Someone in the chat says MicroStrategy is mooning. I don't know if 0.7% is mooning. Why? MicroStrategy doesn't matter. Bitcoin, none of their earnings are consequential on MSTR. Like, if Bitcoin was down 10%, it would matter. But if MicroStrategy doesn't have any other diversified streams of revenue, at least not yet, outside of the software business, to meaningfully make a dent on their premium to net asset value. So this one, I mean, I don't think the earnings matter at all for this. It really is just contingent on Bitcoin here. What else? Their guidance is soft for Q2. I'll pull up Amazon's Q2 guidance right here. They say net sales are expected to be 159 to 164 and grow 7 to 11%. Yeah, 7% is soft if they get on the low side of that. If they get up to that 162, that's probably reasonable. Operating income 13 to 17.5 billion. That's a long range, but still they are guiding for higher than what they guided in Q2 2024, which is all that matters when it comes to year-over-year growth. XYZ, my goodness, dude. 17%. Disgusting. This one got hit. Big Bear missed on the top and the bottom. Big Bear missed on the top and the bottom. BBAI is down 5%. Palantir is up a little bit. NVIDIA is up a little bit. Reddit 18. Reddit's the winner today. Instacart 12.5. Atlassian, that one getting hit pretty badly. Riot earnings. I don't see Riot yet. Riot's flat after hours, so we don't have any of their numbers. But we're looking for the rest. The new ATM matters on MicroStrategy. That's fair. The amount of dilution matters. Granted, I mean, realistically, I think MicroStrategy can say we're going to dilute you by as much as we want and people will vote for it. Like, I've been through the Reddit forums and the groups on MicroStrategy. They believe so heavily in Saylor. They will accept as much dilution as possible. And they have. Like, over the past couple months, I think it's been what, like 17 billion or something of it's been a lot of money of how do you think Saylor keeps getting this money to buy the dip on Bitcoin? So, you know, whatever it is, it could hurt it in the short term, but it's not like the vote is going to go against it for getting there. All right, Apple. We got 2 minutes for Apple. Oh, we're red on Apple. We're red. There you go. Red candle. 62% of you said dump. We are already red on Apple. Let me see the numbers. Should be out very soon. It's not out yet, but it should be up pretty soon. And then we're going to see 4:30 should be up here. Apple. What is the street expecting? Okay, so the street is expecting on Apple. They want them to obviously make some money. They want 162 of EPS, 94.5 of revenue. 94.5 billion and then 162 of EPS. Will it be a red or green Apple? That's a good question. See, look, SB says, I own MicroStrategy and they can dilute as much as I want. I plan on holding it for 10 years. See, look, you're not alone, bro. That's what the MSTR shareholders say. They're like, dilute me into an oblivion. Just keep buying Bitcoin. And it might work. I mean, Bitcoin's held up, you know, it might really work in the next decade. So I don't think the earnings matter that much for MSTR. All right, Apple, we had a little bit of a move. Now that's nothing. All right, 4:30. Here we go. We should be getting a number. How many people own Apple? Put in the chat. Who owns Apple? Put it in the chat. Oh, we're green. Oh, she's green, kind of. Now she's kind of red. Now, look at that. Look at that candle go up and down and up and down. Now she's red. Now she's really red. Oh, boy. Now she's red. 1.5. Could see it getting reversed very soon based on the velocity of that green candle. Apple right here. Let's see. Do we have the numbers? Do we have it? I don't have it yet. Still don't have it yet. I eat 2 apples every day. Dude, bananas are way better than apples. Apples are not even that good. Apple now down 1.3. Apples with peanut butter, though, are great. Apples with peanut butter are phenomenal. Double beat. I don't see it yet. Let me check. I don't see it. You guys are saying double beat? I don't see it yet. It should be popping up pretty soon. Let me see. What do we got? Oh, I think I see it. Yeah, they beat on the top. 165 versus 162 on the top. 165 versus 162 on the top. And on revenues, wow, $100 billion share buyback. There you go. Tim Cook decided to buy back more stock, down 1.5%. Let's get the coverage right here on Apple.
We got those results. We'll be right back to you. Apple earnings are out. Steve Kovac has the numbers. Hi, Steve.
Hey there, Morgan. Yeah, we're looking at beats here on the top and bottom lines. Let me go over EPS first. $1.65. Street wanted to see $1.63. Revenues are also a beat here. $95.36 billion. Street was looking for $94.66 billion. Revenues for...
Okay, so they beat on the top and the bottom. $100 billion buyback.
iPhone also a beat, $46.84 billion. That's compared to the $45.84 billion.
They beat on iPhone by $1 billion. That's not horrible. Basically 50% of the revenues now is the iPhone.
Expected. That's up about 2% for iPhone business year on year. Services, though, a slight miss despite being up nearly 12% year over year. Did slightly miss expectations here. We're looking at $26.65 billion compared to $26.7 billion. China revenues, it's a little bit of improvement here, guys. We're seeing it down slightly, 2% year over year to $16 billion. Way better quarter over quarter than that minus 11% that we saw there. And then as far as the buyback goes, a $100 billion buyback and an increase of the dividend by 4% to 26 cents a share. I'll note that buyback is $10 billion less than it was that record a year ago. Guys, I'll send things back over to you.
Okay, shares are down about 1.5%.
All right, so it's a boring quarter as always. I mean, there's really no volatility to play on this. Down 1.5. 1.5 is nothing. I mean, it's got to really get into that 3 to 4% range to see people being upset. Now it's down 2.3. All right, now it's starting to actually pick up a little speed, but I would say we got to really see it get hit badly. You know, Apple goes up 1 or 2% every other day, so that's not crazy. But it looks like the buyback and the 1 cent increase on the dividend is not enough to get the street to just throw their money at this thing. And that's what we're seeing right now. Here are the actual numbers. Let me pull it up right here. Let's see what they said. Amazon's already out. They missed on AWS. That's why it's down about 4%. Tim Cook says, today, Apple is reporting strong quarterly results, including double-digit growth in services. We were happy to welcome iPhone 16e. There's an iPhone 16e. What the hell is 16e? Has anyone heard of iPhone 16e? I swear on my life, this is the first time I'm hearing there's an iPhone 16e. To our lineup and introduced powerful new Macs and iPads that were taking advantage of extraordinary capabilities of Apple Silicon. And we were proud to announce that we've cut our carbon emissions by 60%. Our March quarter business performance drove EPS revenue of 8% and $24 billion in operating cash flow, allowing us to return $29 billion to shareholders. We increased the dividend by 4%. Instead of 25 cents, it's 26 cents. The dividend is payable on May 15th. And there you go. That's what you got on Apple. We're going to try to get some deeper numbers on this, but by region. So America, 40 billion. Europe, 24. China, 16. That's just a little less than expected. Japan, 7.2. Rest of Asia, 7.2. That's how they got 95 billion on their actual earnings. I want to see the iPad, the Mac, and the watch. Usually they have those segmented. Oh, I got it. Here we go. All right, here's the segmented. So services is the only one that really grew double digits. Everything else is relatively flat. Mac revenue 7.9 versus 7.7. iPhone 46.8 versus 45.8. $1 billion beat. That's more than 50% of the business. Revenue again 95.4 versus 94. EPS beat by 2 cents. iPad 6.4 versus 6.2. Wearables 7.5 versus 7.9. That's a miss. Services actually is a miss, even though it's growing double digits. 26.5 versus 26.7. And then gross margins were, wait, hold on. That's a bad gross margin. Is that a typo? 41.7 versus 47.1? That's got to be a typo, dude. That's got to be, like, hold on. That's a 6% decrease in growth. I think that's a typo. There's no way. I think this thing would be down a lot more if that was gross margin. Really? Hold on. Let me do some math. Yeah, it's 45. The gross margin is 45.8. That's a mess up. It's 45.8. I just did 44 divided by 96. It's probably give or take a little bit here or there. But that's basically the same. That shouldn't be that crazy. 41%. That'd be a 6% decrease in margins. Apple now down 2%. Palantir down 0.21. GoDaddy's flat. Duolingo's up 10. Nvidia's basically flat. Reddit's up 18. S&P 0.2 down, and then Twilio's up 11. Dude, Twilio, Instacart, Reddit, and Duolingo. 4 growth names, but I don't know if people sleep well at night owning those names. You could probably sleep well at night owning Amazon. But those are the names that are moving after hours, not the Amazons and definitely not the Apples right here. Apple down 2, Amazon down 3. CNBC said 47. Okay, so then the actual website just reversed those numbers then. So that should be on the other side, 47 versus 45. But that's fine. They're not tanking because of gross margins. They're tanking because of Well, I get why do you think Apple's tanking? I guess they're tanking. I mean, they beat on the top and the bottom. I guess they're tanking because I don't know. What is the reason they're tanking? Increase the divvy, increase the buybacks. They beat on the top and the bottom. Services is up double digits. Why is Apple getting hit? Outside of the fact that they trade at 34 times and they don't grow. I mean, that could be a simple reason, but that's not a good enough reason because they've always been trading at an expensive level and, they recover. So this doesn't really look aggressive. Tim Cook didn't say anything on the PR about tariffs. China, but that China's a slight miss. That was a 2% miss. I don't know if China would be the reason. China has a massive impact on them. And Tim Cook probably will talk about that today, but is it the guide? Well, they don't give guidance. Let me check their thing again. Yeah, they either, I don't think they give, I think on the call, they might speak of it a little bit, but yeah, there's no guide in the consolidated financials and no guide on the press release. Yeah, I mean, look, there's not a headline reason Apple should be down 2%. They did all the shareholder friendly things. Amazon missed on AWS, so that's your headline. But Apple, I guess the street just is not happy. They wanted a bigger beat, I guess you would say. It's Biden's market. That's why. Yes. Services missed, according to a reporter. Oh, no, services definitely missed. That's a fact. But services still grew double digits, which in a business that is not growing anything double digits, services growing double digits is not horrible. Gross profit margin 46.9. Okay, if that's the actual number, then if 47.1 was the expectation, that's inconsequential. So that's not too crazy, I would say. And they still beat on EPS even with the profit margin being down 0.2. So, I mean, there's not something you could point to. Like you could point to AWS. There's not something you could point to here for why Apple. By the way, you guys know how much Apple spends on CapEx? Guess. Put in the chat. I'm curious, how many people know? How much do you think Apple spends on CapEx? Meta spends 70 billion, Google 75, Amazon's probably going to say 100, Microsoft's at 80. What do you guys think? I think people don't know this stat. How much does Apple spend on CapEx? I heard the number today and I was like, dude, this is why they're behind on AI. They're not spending on it. Or it's definitely not a big core part of the business here. Yeah, SmackDown got it. 2 billion. They spent 2 billion. So, I mean, they're not really heavily investing in that stuff. So that's not hurting their margins either. But they're not super large CapEx spenders.
Multiple years going forward in response to tariffs, how they're moving supply chains, et cetera. I'm sure they're probably rejiggering some of the plans for the upcoming iPhone launch, maybe rolling out some new higher-end models so they can push through some price increases. That will be one mechanism they'll use to offset, some of the tariff fallout. But there's also a lot of, separate from the supply chain, there's a lot of kind of regulatory events and issues that Apple's going to be grappling with. There was a ruling today regarding the App Store. What happens with Google could have a big impact on Apple. Remember, Google and Apple are huge partners. Apple takes in a lot of money from that relationship. So there's a lot of overhangs and issues that Apple's going to be grappling with this calendar year.
Okay. Pat, want to get your response, especially given the fact that iPhone revenue came in a bit better than expected here, but you were also just talking about plane loads full of iPhones to get ahead of tariffs that didn't actually happen.
Yeah, I think we're aligned on the call. I'd heard 1 million. That sounds about right to me. And they stuffed airplanes, got them over before then. The big question is where are they? Are they sitting in Apple inventory? Are they sitting in channel inventory? I think we'll see that in the balance sheet. Something that few of us are talking about on this call is about the future. I mean, Apple is, they bailed on EVs. They embarrassed themselves with Vision Pro. And
for the CapEx number, it's 10.77 billion, but divide that by 4 because I'm talking about quarter over quarter. All these numbers are from the quarter. That's what I'm saying. It's 2 billion a quarter. But overall, yeah, 10 billion. So 2024, they did 9.4, 2023, 10, 2022, 10.7. So when you do that quarter over quarter, that's where you get that 2 billion number. I'm sorry to make that clear, but 2 billion in the quarter, 10 billion for the year. Again, very inconsequential when Apple and Google are spending 7x that amount, but Apple's spending that money buying back their stock instead.
I think AI, the restructuring AI, they pushed it out. What's next for the company? Who's going to do it? I know that Apple's looked at as a safe stock, but to get themselves back into a growth posture, we're going to have to see some longer term changes there. And Tim Cook is going to have to, at some point, address those.
Yeah, we'll see if we get that before WWDC. Let's get back to Steve Kovac for more on these results. A lot more, Steve.
Yeah, I got a lot more for you here, John. I did catch up with Apple CEO Tim Cook on these results, and we did discuss a little bit about what you and your panelists were talking about before the results hit. Pull forward demand. There was a lot of talk about this going into these earnings. Tim Cook telling me, actually, we don't believe, quote, there was a significant pull forward due to tariffs into the March quarter.
Wow. Interesting. Okay, so Tim Cook kind of resisting that import narrative that potentially lowered GDP growth to be negative yesterday.
No obvious evidence of that. Obviously, things could change later on the year, but as far as the March quarter goes, Cook telling us did not see really any evidence of pull forward demand. And let's go over to China. Like I just told you guys earlier, some improvement there, still down year over year, but some improvement. Tim Cook telling me part of that was because of that national subsidy program, telling me, quote, they have this national subsidy program and it's helping to some degree. You can see it in the results, accelerated sequentially. They were at negative 11% in the Q1 time period. We accelerated to negative 2%. And if you look at that negative 2% and expect it a little deeper, and you moved it to constant currency, we were roughly flat in constant currency. So foreign exchange headwinds playing a bit there and trying to showing some improvement as well. And then India, we were also just talking about India here and all the production there. Tim Cook telling us that about over half of the US sales of iPhone were produced in India. So there's some color there. Still unclear when they can get that half up to all of the phones up to 100%, as we know they're trying to do. But that's what we got. As far as tariffs go and strategy moving forward, Cook telling us to expect more of that to come on the earnings call at 5 o'clock, guys. I'll send it back over to you.
All right, so he's not giving it all away to you, but that was
50% of US iPhones in India over China. That's good for their diversifying supply chains, but still, that's not necessarily increasing growth that dramatically. Now, granted, iPhone did beat. See, here's my concern with Apple as well. It's trading at 34 times. They did $94 billion in revenue. The iPhone was more than half of that. At what point do people say we just don't want to keep upgrading the iPhone? I already think that has happened. The only reason I upgraded because I was 3 years old and I didn't get the 16. And the super cycle was. You guys remember that word, super cycle? We kept hearing that from the analysts. Super cycle, super cycle. There's been no cycle that's been super, and that's probably because there's been no AI that's been meaningful on the iPhone. So, yeah, Apple right here, almost down 3%. I wonder what Tim Cook's going to focus on the call, because services missed, even though that's growing decently, and by decently, I mean low double digits. iPhone is the iPhone. It is what it is, but it's the iPhone. Mac, iPad, Watch, all of those came in line with expectations, if not slightly missed. So what's left? The Vision Pro, they don't even report on it anymore. Tariffs, I guess, is going to be the big conversation, right? What do they talk about? Realistically, what do they talk about? Riot is down about 0.51%. I don't have their earnings. Is there any company we missed? We have Amazon in 15 minutes. So we'll start Amazon in 15 minutes at 5 p.m. Eastern. Amazon's more important, in my opinion, than Apple. I've listened to the Apple call before. It's very boring. It's mainly reading financials the most of the time, and the questions are like not that interesting. However, I will be monitoring it to get Tim Cook's tariff response. But Amazon, you actually get a big picture of AI, NVIDIA, CapEx, AWS, cloud. Like there's so many more things that we need to care about versus Apple. I mean, dude, this is why I can't buy Apple. Like, where's the growth story? Where is there is no growth story. Like I just don't. And it's trading at an I mean, look, I know Palantir is expensive, but Palantir is growing. You could say it's not growing enough for their valuation. That's fine, but Apple's not growing at all. I mean, you got a little bit of EPS growth, but that's manufactured via the buybacks. And the sad thing about the buybacks is that the whole point of Apple, the 1984 campaign they launched, which was called Think Different, buybacks are not that different. Buybacks are buybacks. Thinking different means you got to invest in the future. And they just haven't set themselves up for that. Still in a great, American company, worldwide company, but there isn't a lot of innovation coming here. I mean, I don't know why Siri is not the modern ChatGPT, It's weird that that's not the case right now, but that is some of the pain we're seeing on the overall Apple thesis and narrative. There's no cars, there's no robots. A lot of that stuff is just not there. Palantir 115 after hours. All right, Palantir getting a little hit. down about 0.46. NVIDIA, probably contingent on the AMZN call. Reddit, great show of the day, 16%. That one really did their thing. AMGN, I have their earnings. AMGN, let me pull that up real quick here. And then there's a couple others we didn't look at. So we'll take a look at those as well.
Amgen, adjusted earnings per share coming in at $4.90 versus the $4.30 that the street was looking for, and revenue coming in at $8.15 billion versus $8.6 billion that they, or $8.06 billion that they were looking for. And it's a pretty broad beat. Some of the drugs that surpassed estimates: cholesterol drug Repatha, osteoporosis drug Prolia. I do want to call out, though, some misses in rare disease drugs that Amgen got through its acquisition of Horizon. A lot of those drugs coming up short, and particularly Tepezza. That's a big one that we're watching. They did reaffirm their full year adjusted earnings and revenue guidance. And they do say that their guidance includes estimated impact of current tariffs, but it does not account for future potential tariffs like sector-specific tariffs.
Which in the pharmaceutical space, that would not be the best for them as well. Jamie, thank you for the $5 super chat. Criminal case, and Buffett probably sold shares, the buybacks to offset the Buffett sold shares. So Buffett is speaking at the annual conference, Berkshire shareholder conference, on Saturday. We're going to find out on Saturday how much Apple he sold, if he sold. But if we see that Apple sold shares, Buffett sold shares, which, I mean, look, Buffett's been selling everything. So, like, why wouldn't he sell Apple, right? Especially if he's been selling in the fears of a trade war. I mean, dude, he's got God knows how many hundreds of billions in Apple. Apple's the most affected by tariffs. Buffett is on record saying that tariffs are an act of war, and he sold the S&P and all the other different holdings he had. He still has stocks, but he has way more treasuries than stocks, over 280 billion in treasuries, more than the Fed has. Why would he hold on to a meaningful amount of Apple, right? So I definitely think that there is an argument that him selling could also get hit. Robert says cash isn't an indicator for a good company. It's an indicator for losing money to inflation because you can't invest it properly into the AI future. I 1000% agree. I mean, at the end of the day, that cash is being left there dying to inflation. It's buying back their stock, but it is not moving the company towards the right direction. So if Buffett sells on Saturday, and we will find out all of his moves on Saturday over the past 3 months, then we'll get a much better understanding of how Berkshire is playing it. And, you know, that could also be bad for Apple. Here's Instacart. We had their earnings as well. Let me pull that up. They are also not doing too bad. And they are up about 5% after hours.
Guidance, though, and this may be what's saving the stock right now, which is now up more than 5%, in line to better than expected. I'll continue to go through these pair of earnings and bring you more as I get it, guys.
Okay.
Instacart, small miss on revenue. Guidance was good. Beat on EPS. That stock doing well. Instacart, Reddit, Duolingo. Instacart now 7%. Reddit 17. Duolingo 10. And then Twilio 8. There you go. Those are your 4 winners today. Those are your 4 winners. Apple and Amazon end up being the losers. Amazon, yikes, down 4%. 4% because of missing on AWS. Why is Hood down today? I don't know. I can tell you why Hood shouldn't have been up 10%. I can give an explanation for that. I can't give you a great explanation for why it's down 5%. That's just kind of weird. So I don't know. There is I was looking at a couple people sent me some stuff around the technical supply resistance at that $49 range. Like, it's really heavy. And so from that perspective, it was bound to kind of top out at that range. And then maybe it's just getting beaten up as it sits below it. So it might be more of a technical thing, algorithmic thing versus like a fundamental thing. I don't see the fundamental reason there. Apple right here down 2.5, but I did buy the Hood dip today. So NVIDIA 111, Duolingo 437. That's up 9.3%. MicroStrategy basically flat after hours on their earnings as well. Amit, did you sell Grab? No, I have all my Grab. Grab was weird today too. It was down like 2%. I was no idea. Yeah, 2.25. Like, I don't know. I have zero reason to understand why. But you did have Trump make some comments, and he just kept saying more stuff about we're going to get taxes down, we're going to get tariffs down. Trump said, he said, oh, the oil one, any country buying oil from Iran will face sanctions. Maybe that created some volatility in the markets. He then said, whoever takes oil from Iran can't do business with us. And then he said, we put sanctions on Iranian oil yesterday. He also said so much money will be taken in that will cut taxes. And then he also says we'll be paying off debt. He also said Lutnick has no life because he's negotiating all the time. So yeah, Lutnick doing the best negotiating ever to get us these trade deals. Again, this idea that we will make so much money off tariff revenues that we're going to cut income taxes for people making less than 200,000. I don't believe it's ever going to happen, dude. And if it is going to happen, then we would have to collect trillions or at least many, many hundreds of billions in tariff revenue to offset it. How are we going to do that? Because I think the whole way to get deals done is to get rid of this 10% universal tariff. That's the biggest bargaining chip we have. And if you get rid of it, then you can't collect that juicy tariff revenue, which means people are going to have to pay taxes. I just don't believe in it. I don't see that. I really don't see that one happening. At least not in this current form. Robinhood right here down a little bit after hours. Palantir 0.28% down, and then Amazon still getting hit. Their operating margins were great though. Amazon, I know it's down 4%, but operating margins, like that's always been the thing I've looked at with Amazon, and it's up 11.8%, almost 12%. Like I don't think people can get super upset about that one. A little bit more Apple coverage right here, and then we'll keep going from there. We got the call with Amazon in about 5 minutes.
Almost $500 million coming in at 7.52 versus 7.95 expected. And services was just in line. You make anything of that?
100%. I don't think this is something to get excited about at all. It's trading at 29 times earnings. That is historically the average of what it trades at. So it's not at a discount. And you had flat year-over-year iPhone sales. Services that missed under 12%. Maybe it's 11.5. It's not a big miss, but it's a miss. And that's a big driver of margins. China down 2%. They're still losing share in China. And India, they make 35 million phones in India, 12 million of which they're going to keep for Indians.
Oh, we got Riot. Hold on. Riot shit the bed. Oh my God, dude. Holy crap. 90 cents on EPS negative, missed by 330%. Street wanted negative 21, 161 versus 160 on revenues. Yeah, the Bitcoin miners kind of suck. It's like, dude, I mean, yeah. I mean, I don't know how they missed that much with Bitcoin doing as well as it has, but Bitcoin mining is a tough business also, you know? Even if Bitcoin goes up, it doesn't necessarily correlate. Like Coinbase, you got trading volumes, boom. That's your direct correlation. With Bitcoin miners, it's different. There's a lot of costs to being able to get Bitcoin. Marathon after hours is down 0.43, and then CleanSpark down 1.38. Yeah, I mean, there you go. That's what you got on Riot. So, yes, this is a crypto play. The Bitcoin miners have been pretty, transparent about this for a while. I was in CleanSpark options back in January. I got out of them in February in 2024, and I went to Robinhood because it just didn't make sense. The thesis was just like, what are we investing in here? What is this, dude? Trading it is a different story, but investing in the miners to me was weird, and they didn't perform. Bitcoin went on a crazy run last year, 3x, then the miners were flat. So Bitcoin miners getting hit badly. Amid, how much did AWS miss by? 0.6% on the expectations. 17 versus 17.6%. Reddit up 17% as well. And that's why the street is upset at AWS. All right, here we go. That is what we got on Riot. Let's get back to Apple, and then we got Amazon in about 5 minutes.
So how do they ramp that up? That's going to take a long time. India doesn't have the infrastructure that to get to 100%. So to me, if I'm choosing between Amazon and Apple, Amazon is a clear winner in my mind. And yeah, tariffs are going to hurt them in the short term, but the demand is still very, very strong. The growth is still very, very strong. And the valuation is at a discount to its historical average.
Pat, the comments on China, as well as the comments on trade and supply chain to the extent they were just given to Steve Kovac?
I'm impressed. I mean, 50% of U.S. iPhones coming out of India. I mistakenly said Vietnam, but I'm quite impressed. That's an absolute huge number, and to be able to scale that, you're right. India is different from China right now. Getting roads, getting electricity, getting water, getting lines set up, and more importantly, getting a complete supply chain setup around there is important. And one thing we can't forget is they aren't doing full subassembly in India. This is essentially a final assembly. And if Apple, the administration seems to change its mind randomly, weekly, daily on this, there could be new rules for what passes as final assembly. And that's a conversion rule. And I'm going to be interested in researching exactly what is there out of the other side of my mouth. But net.
Yeah, dude. It's even funny. All the analysts are just like, they don't exactly know what the headline is other than it's not a growth quarter. Like, you cannot point to one thing that Apple missed on in some, horrible way to be like, yep, they deserve to be down. But no one knows why they deserve to be up. And so you got a negative 2.5. And so Amazon is down 4.3. Apple's down 2.5. I wonder which one reverses first on the call or if none of them reverse. Riot down about 3.6 right here. My guess would be Amazon reverses. I think Jassy warms them up, gives them some good news, and we turn this around, at least get back to 190. I think that's possible. Apple, I also think that could happen. I mean, like, it's Apple. At the end of the day, it's Apple. So don't think these two have to stay down going into this call. All right, Apple right here, down 2.6%. MicroStrategy's flat, Robinhood's down 0.5%, and then Palantir down about 0.27%. So we're going to be listening to Amazon. I will keep everyone updated on the other calls, and I will try to get as many details as I can. We can't listen to every single call. For those that want to listen to other calls, feel free to leave. MicroStrategy, all that stuff. But I think Amazon will set the stage for a decent chunk of the content we have to look at right here. Any thoughts about Hoodemit? I don't think it needed to be up today, but I did need to be down. So that one was weird to me today. But look, it's volatile. We got a volatile market. Market wants to see Q2 results. Q2 results are not out yet. I mean, the market wants to pull forward more expectations. Hood is already pumped from those April 8th lows. So asking for a 49 to like a 60 pump is aggressive, dude. I mean, I can understand 52, 53. I don't think we have to go back to 46, but it is aggressive for people that thought it would just bump up to like 60. It's a different macro than February. It's a totally different macro in February. And yeah, block right here, down 16% as well. I did buy Amazon before the bell, or should I say the chat voted to buy Amazon. And so we had 75-25 buying those 100 shares. We bought them, and it is what it is. Now, look, same thing happened with Google, dude. We like, these companies are crushing numbers. It's just at the end of the day, playing earnings is like, anything could happen. And then big tech still isn't fully in style. I mean, the only way they come in style is if they massively crush. Meta destroyed EPS, right? They were up 4%. And even Meta is down 1% right here. And then Microsoft had one of their best Azure quarters in over a year. They were up 7%, but even them are down a little bit after hours. So all of these really going to be affected by what Jassy says on the call, which is going to be important. All right, let me get on to the call. We should be starting probably in like 30 seconds, and then we'll keep going from there. They have music right here. It should be starting very soon, and we'll keep going. How did SoFi do today? Where was SoFi? SoFi is flat, but is down after hours by about 1%. S&P down 0.23. And then Robinhood down 5 on the day. Palantir down about 2 on the day as well. Oh, yeah, Apple, I forgot. They got sued yesterday. Not even the company. One of the directors got sued for perjury. Apple got violated yesterday when it came to that. So that's another little overhang they're going to have to deal with as well. But that court case is something that is going to probably be a little bit of a headwind. Perjury, yeah, he lied. Apparently, they're accusing him of lying under oath.
Thank you for standing by.
So it's not the best. All right, here we go. Here's Amazon.
Amazon.com first quarter 2025 financial results teleconference. At this time, all participants are in a listen-only mode. After the presentation, we will conduct a question-and-answer session. Today's call is being recorded. And for opening remarks, I will be turning the call over to the Vice President of Investor Relations, Mr. Dave Files. Thank you, sir. Please go ahead.
Hello, and welcome to our Q1 2025 financial results conference call. Joining us today to answer your questions is Andy Jassy, our CEO, and Brian Olsavsky, our CFO. As you listen to today's conference call, we encourage you to have our press release in front of you, which includes our financial results, as well as metrics and commentary on the quarter. Please note, unless otherwise stated, all comparisons in this call will be against our results for the comparable period of 2024. Our comments and responses to your questions reflect management's views as of today, May 1st, 2025 only, and will include forward-looking statements. Actual results may differ materially. Additional information about factors that could potentially impact our financial results is included in today's press release and our filings with the SEC, including our most recent annual report on Form 10-K and subsequent filings. During this call, we may discuss certain non-GAAP financial measures. In our press release, slides accompanying this webcast, and our filings with the SEC, each of which is posted on our IR website, you will find additional disclosures regarding these non-GAAP measures, including reconciliations of these measures with comparable GAAP measures. Our guidance incorporates the order trends that we've seen to date and what we believe today to be appropriate assumptions. Our results are inherently unpredictable and may be materially affected by many factors, including fluctuations in foreign exchange rates, changes in global economic and geopolitical conditions, tariff and trade policies, and customer demand and spending, including the impact of recessionary fears, inflation, interest rates, regional labor market constraints, world events, the rate of growth of the internet, online commerce, cloud services, and new and emerging technologies, and the various factors detailed in our filings with the SEC. Our guidance assumes, among other things, that we don't conclude any additional business acquisitions, restructurings, or legal settlements. It's not possible to accurately predict demand for our goods and services, and therefore our actual results could differ materially from our guidance. And now I'll turn the call over to Andy.
Thanks, Dave. Today we're reporting $155.7 billion in revenue, up 10% year over year, excluding the impact from foreign exchange rates. Operating income is $18.4 billion, up 20% year over year, and trailing 12-month free cash flow is $25.9 billion. We're pleased with our continued business progress, but more importantly, with our pace of innovation and additional improvement in our customer experiences. In our stores business, we once again saw strong consumer resonance in our continued work on selection, value, and shipping speed. Our broad selection offers customers choice across their shopping journeys. We welcome well-known brands such as Oura Rings, Michael Kors, and The Ordinary, as well as a new shopping experience with Saks that offers a refined luxury assortment of fashion and beauty items from brands like Dolce & Gabbana, Balmain, Erdem, Giambattista Valli, and Jason Wu Collection. As always, we're working to keep prices low. And with this being an uncertain moment for consumers, it's even more important than it typically is. In Q1, we held deal events worldwide to help customers save over $500 million across the Big Spring Sale in the US and Canada, Spring Deal Days in Europe, and Ramadan Eid sale events in Egypt, Saudi Arabia, Turkey, and the UAE. Prime members will have more opportunities to save throughout the year, including at our 11th Prime Day event in July. Over the past few years, we've made significant progress in making our fulfillment network more efficient and cost-effective. We've shared many times that an important turning point was regionalizing our national fulfillment network into regional hubs. By stocking items closer to where customers live, we're able to deliver more orders faster, often in fewer packages and at lower delivery costs. The next challenge was getting as many items as possible into these regional nodes. Our inbound network, which is how we get items to each fulfillment center, hadn't been architected to leverage this new regionalization structure. So we redesigned it and just rolled out a new inbound architecture that expands the share of products that we can place in each fulfillment center, improving delivery speeds and lowering our cost to serve. In the first quarter, we once again set new delivery speed records with our fastest delivery ever for Prime members around the world. And we delivered more items in the same day or next day in Q1 than any other quarter in our history. Looking ahead, we'll continue to refine our newly redesigned inbound network, build out our same-day delivery sites, and add additional robotics and automation throughout our buildings. You'll also see us expand the number of delivery stations that we have in rural items in the same day or next day in Q1 than any other quarter in our history. Looking ahead, we'll continue to refine our newly redesigned inbound network, build out our same-day delivery sites, and add additional robotics and automation throughout our buildings. You'll also see us expand the number of delivery stations that we have in rural areas of the U.S. so we can get items to people who live in less densely populated areas much more quickly. I thought I'd share a few thoughts on the prospect of heightened tariffs on our stores business. Obviously, none of us knows exactly where tariffs will settle or when. We haven't seen any attenuation of demand yet. To some extent, we've seen some heightened buying in certain categories that may indicate stocking up in advance of any potential tariff impact. We also have not seen the average selling price of retail items appreciably go up yet. Some of this reflects some forward buying we did in our first-party selling, and some of that reflects some advanced inbounding our third-party sellers have done. But a fair amount of this is that most sellers just haven't changed pricing yet. Again, this could change depending on where tariffs settle. Amazon is not uniquely susceptible to tariffs. As it relates to China, retailers who aren't buying directly from China are typically buying from companies who themselves are buying from China, marking these items up, rebranding, and selling to U.S. consumers. These retailers are buying the product at a higher price than Chinese sellers selling directly to U.S. consumers in our marketplace, so the total tariff will be higher for these retailers than for China direct sellers. It's also sometimes easy to forget what Amazon sells. We're not mostly selling high average selling price items, though we certainly sell a bunch. In the first quarter, our everyday essentials grew more than twice as fast as the rest of our business and represented 1 out of every 3 units sold in the U.S. on Amazon. Even if you exclude Whole Foods Market and Amazon Fresh, Amazon is one of the largest grocers in the U.S. with over $100 billion in gross sales last year. People are buying a lot of their everyday essentials at Amazon. We also have extremely large selection, hundreds of millions of unique SKUs, which means we're often able to weather challenging conditions better than others. When there are periods of discontinuity, substantial unexpected product trends emerge. Think about the pandemic, when items like masks and hand sanitizer became big sellers. When you have the broadest selection like we do, and 2 million plus global sellers like we do, you're better positioned to help customers find whatever items matter to them at lower price points than elsewhere. Finally, when there are uncertain environments, customers tend to choose the provider they trust most. Given our really broad selection, low pricing, and speedy delivery, we have emerged from these uncertain eras with more relative market segment share than we started and better set up for the future. I'm optimistic this could happen again. Moving to a few words on Amazon Ads. We're working hard to be the best place for brands of all sizes to grow their business. We are pleased with the strong growth on a very large base, generating $13.9 billion of revenue in the quarter and growing 19% year over year. We're seeing strength across our broad portfolio of full funnel advertising offerings that help advertisers reach an average ad-supported audience of more than 275 million in the U.S. alone. This includes our top of funnel efforts to drive brand awareness, to bottom of funnel offerings where we measure outcomes at the point of conversion. Amazon Ads provides brands with tools to reach targeted audiences in our own entertainment properties such as Prime Video, Twitch, and IMDb, in live sports such as NFL, NBA, and NASCAR, audio content such as Amazon Music and Wondery, and of course in our store, as well as many other external sites such as Pinterest and BuzzFeed. All of our audience and measurement capabilities work for the ads we deliver across premium third-party publishers through Amazon DSP, and our secure clean rooms provide advertisers the ability to analyze data, produce core marketing metrics, and understand how their marketing performs across various channels. We continue to see a lot of opportunity to further expand our full funnel capabilities for brands. AWS grew 17% year over year in Q1 and now sits at a $117 billion annualized revenue run rate. We continue to help organizations of all sizes accelerate their move to the cloud, helping to modernize their infrastructure, lower costs, and speed up innovation. We signed new AWS agreements with companies including Adobe, Uber, NASDAQ, Ericsson, Fujitsu, Cargill, Mitsubishi Electric Corporation, General Dynamics Information Technology, GE Vernova, Booz Allen Hamilton, NextEra Energy, Publicis Sapient, Elastic, NetSmart, and many others. It's useful to remember that more than 85% of the global IT spend is still on premises, so not in the cloud yet. It seems pretty straightforward to me that this equation will flip in the next 10 to 20 years. Before this generation of AI, we thought AWS had the chance to ultimately be a multi-$100 billion revenue run rate business. We now think it could be even larger. If you believe your mission is to make customers' lives easier and better every day, and you believe that every customer experience will be reinvented with AI, you're going to invest very aggressively in AI, and that's what we're doing. You can see that in the 1,000+ AI applications we're building across Amazon, You can see that with our next generation of Alexa, named Alexa Plus. You can see that in how we're using AI in our fulfillment network, robotics, shopping, Prime Video, and advertising experiences. And you can see that in the building blocks AWS is constructing for external and internal builders to build their own AI solutions. We're not dabbling here. We're very intentionally giving builders the broadest possible capabilities at every level of the AI stack, cost effectively, to use AI expansively across their businesses. At the bottom layer, for those building models, our new custom AI chip, Trainium 2, is starting to land capacity in larger quantities with significant appeal and demand. While we offer customers the ability to do AI in multiple chip providers and will for as long as I can foresee, customers doing AI at any significant scale realize that it can get expensive quickly. So the 30 to 40% better price performance that Trainium 2 offers versus other GPU-based instances is compelling. For AI to be as successful as we believe it can be, the price of inference needs to come down significantly. We consider this part of our mission and responsibility to help make it so. At the middle layer, for those wanting to leverage frontier models to build generative AI apps, Amazon Bedrock is our fully managed service that offers a choice of high-performing foundation models with the most compelling set of features that make it easy to build high-quality generative AI applications. We continue to iterate quickly on Bedrock, adding Anthropic's Claude 3.7 Sonnet hybrid reasoning model, their most intelligent model to date, and Meta's Llama 4 family of models. We were also the first cloud service provider to make DeepSeek R1 and Mistral AI's Pixtral Large generally available as a fully managed model. And of course, we offer our own Amazon Nova state-of-the-art foundation models in Bedrock, with the latest premier model launching yesterday. They deliver frontier intelligence and industry-leading price performance, and we have thousands of customers already using them, including Slack, Siemens, Sumo Logic, Coinbase, FanDuel, Glean, and Blue Origin. A few weeks ago, we released Amazon Nova Sonic, a new speech-to-speech foundation model that enables developers to build voice-based AI applications that are highly accurate, expressive, and human-like. Nova Sonic has lower word error rates and higher win rates over other comparable models for speech interactions. The technology world is also abuzz about the potential of agents. To date, virtually all of the agentic use cases have been of the question-answer variety. Our intention is for agents to perform wide-ranging, complex, multi-step tasks, like organizing a trip or setting the lighting, temperature, and music ambience in your house for dinner guests, or handling complex IT tasks to increase business productivity. There haven't been action-oriented agents like this until Alexa Plus. But the technology to build these agents is still quite primitive, inaccurate, and requires constant human supervision. We've just released a research preview of Amazon Nova Act, a new AI model trained to perform actions within a web browser. It enables developers to break down complex workflows into reliable atomic commands like search or checkout or answer questions about the screen. It also enables them to add more detailed instructions to these commands where needed, like don't accept the insurance upsell. Nova Act aims to move the current state-of-the-art accuracy on multi-step agentic actions from 30 to 60% to 90+%, with the right set of building blocks to build these action-oriented agents. At the very top of the stack are the applications. This past quarter, Amazon Q, the most capable generative AI-powered assistant for accelerating software development and leveraging your own data, launched a lightning-fast new agentic coding experience within the command line interface that can execute complex workflows autonomously. Customers are loving this. We also made generally available GitLab Duo with Amazon Q, enabling AI agents to assist multi-step tasks such as new feature development, code base upgrades for Java 8 and 11, while also offering code review and unit testing, all within the same familiar GitLab platform. Our AI business has a multi-billion-dollar annual revenue run rate, continues to grow triple-digit year-over-year percentages, and is still in its very early days. While there is good reason for the high optimism about AI, I'd conclude my AWS comments with a reminder that there is still so much on-premises infrastructure yet to be moved to the cloud. Infrastructure modernization is much less sexy to talk about than AI, but fundamental to any company's technology and invention capabilities, developer productivity, speed, and cost structure. And for companies to realize the full potential of AI, they're going to need their infrastructure and data in the cloud. I want to briefly mention a few other items. As I've referenced a couple times in Q1, we introduced Alexa Plus, our next generation Alexa personal assistant, who's meaningfully smarter and more capable than her prior self, can both answer virtually any question and take actions, and is free with Prime or available to non-Prime customers for $19.99 a month. We're just starting to roll this out in the US and we'll be expanding to additional countries later this year. People are really liking Alexa Plus this far. We're excited and honored to be part of the joint venture that will be creating the next generation of the esteemed James Bond film franchise. We recently named acclaimed producer Amy Pascal and David Heyman to produce the next James Bond movie. Additionally, just a couple days ago, Project Kuiper reached a significant milestone by launching our first satellites into orbit, with more being launched soon, and we expect to begin offering service to customers later this year. I'm proud of what our teams around the world have delivered. We're excited about what we're inventing and working on as we speak, and with that, I'll turn it over to Brian for a financial update.
Thanks, Andy. I will begin with our top-line financial results.
Okay, this part's going to be boring, bro. It's just going to be numbers.
$55.7 billion, a 10% increase year over year, excluding the impact of foreign exchange. This equates to a $1.4 billion headwind from foreign exchange year over year in the quarter. Worldwide operating income was $18.4 billion, approximately $400 million above the high end of our guidance range. These results include one-time charges that impacted North America and international operating income that I will discuss in a moment. First, let's start with the net sales results for these segments. In the North America segment, first quarter revenue was $92.9 billion, an increase of 8% year over year. Our international segment revenue was $33.5 billion, also an increase of 8% year over year, excluding the impact of foreign exchange. Worldwide paid units.
I'm going to switch to Apple real quick, see what they're saying, but I don't think it's anything crazy.
Customer engagement across our services offerings also continued to grow. Both transacting and paid accounts reached new all-time highs, with paid accounts growing double digits.
Yeah, there's nothing there. There's nothing there.
Screw 8 delivery speeds for Prime members, enabled by improved inventory placement. Our vast selection gives customers choice across various price points, particularly in categories like grocery, which includes everyday essentials. These are the items that people purchase most frequently. We partner with millions of independent sellers from around the world. These selling partners are important contributors to our broad selection, and worldwide third-party seller unit mix was 61% in Q1, consistent with Q1 of last year. Shifting to profitability, North America segment operating income was $5.8 billion, and international segment operating income was $1 billion, with operating margins of 6.3% in North America and 3% internationally. As I mentioned earlier, during the quarter, we recorded one-time charges related to some historical customer returns that have not yet been resolved, and some costs to receive inventory that was pulled forward into Q1 ahead of anticipated tariffs. Without these charges, North America and international operating margins would have been approximately 90 basis points and 70 basis points higher, or operating margins of 7.2% for North America and 3.7% for international. We are pleased with how our teams continue to execute and deliver for customers. In Q1, our newly re-architected inbound network drove productivity in our fulfillment and transportation network, leading to better inventory placement and higher units per package, and as a result, lower delivery costs. Beyond Q1, we have a number of initiatives underway to continue improving our cost structure, such as fine-tuning our inbound network, building out our same-day delivery sites, expanding our rural delivery network, and adding robotics and automation to our facilities. Better inventory placement remains a top priority. Better placement drives more in-stock selection, reduces travel distances, and speeds up delivery. And having the inventory in the right place at the right time increases the likelihood that multiple items can be combined in a package, which helps reduce packaging and costs. Although progress won't always be linear, we have a good plan to continue to drive improvement over time. Shifting to advertising. Advertising remains an important contributor to profitability in the North America and international segments. Advertising revenue grew 19% year over year. We're pleased with the accelerating growth on an increasingly large base. We're seeing strong adoption across our full funnel advertising offering as brands appreciate our ability to connect them with customers. We'll also continue to invest in other long-term opportunities. These efforts have the potential to be important to customers and Amazon in the future, including Kuiper, where we had our first launch of our production design satellites earlier this week, and we'll be launching more satellites throughout the year. We're closely monitoring the macroeconomic environment, including the impact of tariffs. We're planning for various outcomes, and we've taken a number of actions to protect the customer experience. We're doing everything we can to keep our prices low for customers in a way that makes economic sense. Moving next to our AWS segment, revenue was $29.3 billion in Q1, an increase of 17% year over year. AWS now has an annualized revenue run rate of more than $117 billion. During the first quarter, we continue to see growth in both generative AI business and non-generative AI offerings. As companies turn their attention to newer initiatives, bring more workloads to the cloud, restart or accelerate existing migrations from on-premises to the cloud, and tap into the power of generative AI. AWS operating income was $11.5 billion and reflects our continued growth, coupled with our focus on driving efficiencies across the business. As we've said before, we expect AWS operating margins to fluctuate over time, driven in part by the level of investments we're making at any point in time. We plan to bring on an increasing amount of capacity in the back half of the year. Now turning to our cash CapEx, which was $24.3 billion in Q1. The majority of this spend is to support the growing need for technology infrastructure. It primarily relates to AWS as we invest to support demand for our AI services and increasingly in custom silicon like Trainium, as well as tech infrastructure to support our North America and international segments. We're also investing in our fulfillment and transportation network to support future growth and improve delivery speeds and our cost structure. This investment will support growth for many years to come. While we primarily focus our comments on operating income, I'd like to point out that our first quarter net income of $17.1 billion includes a pre-tax gain of $3.3 billion included in non-operating income, and it relates to our investment in Anthropic. This activity is not related to Amazon's ongoing operations, but rather the result of the conversion of a portion of our convertible notes to non-voting preferred stock. Turning to Q2 guidance. As a reminder, our guidance considers a range of possibilities and takes into account Q1 results, trends in quarter-to-date results, and expectations around the macroeconomic environment. Q2 net sales are expected to be between $159 billion and $164 billion. We estimate the year-over-year impact of changes in foreign exchange rates based on current rates, which we expect to be a headwind of approximately 10 basis points in the quarter. As a reminder, global currencies can fluctuate during the quarter. Q2 operating income is expected to be between $13 billion and $17.5 billion. This estimate includes the impact of our seasonal step-up in stock-based compensation expense in Q2, driven by the timing of our annual compensation cycle. The external environment remains complex, and as we have done throughout our history, we are focused on the inputs that we can control to protect the customer experience. We will work hard to remain the place customers trust for sharp prices, broad selection, and convenience. We'll remain focused on driving a better customer experience, and we still believe putting customers first is the only reliable way to create lasting value for our shareholders. With that, let's move on to your questions.
All right, here we go. We'll get
Thank
the
you.
CapEx
At
guy
this
here.
time, we will now open the call up for questions. We ask each caller to please limit yourself to one question. If you would like to ask a question, please press star one on your keypad. We ask that when you pose your question, you pick up your handsets to provide optimum sound quality. Once again, to initiate a question, please press star, then one on your touchtone telephone at this time. Please hold while we poll for questions.
I think we'll get more CapEx stuff here in the questions because we didn't get it yet. It's recovering a little bit, 187.
And the first question comes from the line of Ross Sandler with Barclays. Please proceed with your question.
Great. I think I'm going to leave the China questions to others and focus on AWS and kind of AI. So Andy, it seems like you've been bringing on a lot more P5 GPU instances since February, from what it looks like, to kind of support all these new AI workloads. So how would you characterize in the first quarter and maybe here in the second quarter the kind of supply-demand imbalance that you talked about before around AI workloads? And when do you think that AWS will be in a position to kind of capture enough AI revenue to drive acceleration? Is that something that could happen this year, or do you see that more like next year, given your capacity constraints? Thank you very much.
Thanks, Ross. I would say that we've been bringing on a lot of P5s, which is a form of NVIDIA chip instances, as well as landing more and more Trainium 2 instances as fast as we can. And I would tell you that, our AI business right now is a multi-billion-dollar annual run rate business. It's growing triple-digit percentages year over year. And as fast as we actually put the capacity in, it's being consumed. So, I think we could be helping more customers and driving more revenue for the business if we had more capacity. We have a lot more Trainium 2 instances and the next generation of NVIDIA's instances landing in the coming months. I expect that there are other parts of the supply chain that are a little bit jammed up as well. Motherboards and some other componentry. But I do think, and some of that is just because there is so much demand right now. But I do believe that the supply chain issues and the capacity issues will continue to get better as the year proceeds.
And the next question comes from the line of Eric Sheridan with Goldman Sachs. Please proceed with your question.
Thanks so much for taking the question. Maybe I could ask a two-parter. First, in terms of strategy, Andy, how do you think about positioning the company for the medium term, given all the levels of uncertainty out there about how the global trade environment might shift in the coming months? What do you see as the key strategic priorities that will allow the company to sort of be able to capitalize one way or another, depending on various elements of outcome? And how do you prioritize those investments in the months ahead? And then with respect to the 1 quarter forward operating income guide, is there anything in there from a cost side that we should be thinking about as purely aligned with those types of investments against the trade landscape that might not repeat either later into this year or next year? Thanks so much.
Thanks, Eric. It's hard to tell what's going to happen with tariffs right now. It's hard to tell where they're going to settle and when they're going to settle. And so a lot of what we're thinking about short and medium term actually turns out to be what we think about long term too, which is how do we actually have the broadest possible selection for customers at the lowest possible prices. And there's maybe never been a more important time in recent memory than trying to keep prices low, which we're heads down, pretty maniacally focused on, and then get things to people quickly and take care of customers. And that is the heart of what we're doing. And you can see different initiatives that we've taken within those priorities. We've done some forward buys of inventory where we're the first party seller. Our third party sellers have pulled forward a number of items so that they have inventory here as well. And those are all, we're encouraging that because we're trying to keep prices as low as possible for customers. I think also when you have as broad selection as we have, and we have much broader selection than other retailers, it means that when you've got this continuity, like we may potentially have, you're better able to help customers find what they want, no matter what those trends are. And I mentioned in my opening comments about what happened in the pandemic, and you can bet there are going to be things that we don't anticipate that customers really value and want that are different. It could be as simple, by the way, as just favoring other brands that maybe people didn't know about before, but where they have a more favorable price equation for customers. And I think when you've also got, another thing that people forget is that when you've got 2 million plus sellers, they're not all going to take the same strategy if there ends up being higher tariffs. I mean, there are going to be plenty of sellers that decide to pass on those higher costs to end consumers, but they're going to, we have a lot of sellers in lots of different countries, and not all of them are going to pursue the same tack. And so I think when you've got larger diversity like we have a better chance of some of those sellers deciding that they're going to capture share, and they're not going to pass on all or any of those tariffs to customers. And so I think customers are going to have a better chance of finding variety on selection and on lower prices when they come here. And the last thing I would say is that we have been in a number of our businesses, but just I'd say over the last 6 years or so, we have been diversifying where we produce things over a long period of time. We had I would say a meaningfully higher concentration of where we produced components for AWS or devices in China than we have now, where we've diversified meaningfully over that time, and we just thought that was wise to do so. And so those are some of the ways that we're trying to make sure that we are protecting our customers over the short, medium, and long term. But it turns out that most of those are the things that we focus most on, which is really broad selection for ultimate choice, really low prices, and very fast delivery.
Eric, I'll take your question on the guidance and especially on operating income. I think that was your question, and the cost that might be in Q2. The thing I'd point to again is what I mentioned earlier. The stock-based comp always steps up generally in Q2 versus Q1, and then resets a rate that carries through for the next 4 quarters. You can look at historic trends to get an idea of that. Secondly, we do have some additional Kuiper launch costs in Q2. You saw a launch happen this week. And a reminder that we expense those launch costs until the point of commercialization, which the plan is to have that be later in this year.
Thank you. And the next question comes from the line of Justin Post with Bank of America. Please proceed with your question.
Great, thanks. I'll go back to AWS. I know in the past you said revenues can be lumpy. Can you explain why they might fluctuate up and down if it's beyond just capacity? And you see the competitors, with some pretty good growth rates. How do you think about the difference there? Obviously, your dollar growth is very good, but how do you think about the difference there versus some of your competitors? Thank you.
Well, the first thing I would say is when we've historically said that revenue can be lumpy, this was, we've been saying this well before what's happened with AI over the last couple of years. And the reason for that is the sales cycle particularly for enterprise. It's true for startups. What you really want is you want to have the type of capabilities where startups want to primarily choose to run on top of your platform. And that's true. If you look in the startup space, the vast majority of successful startups over the last 10 to 15 years have run on top of AWS. And it's unpredictable when those startups are going to find product market fit and grow substantially. And it's hard for them to predict and even harder for us to predict. And the same thing goes on the enterprise side but in a different way, when the sales cycle on the enterprise side is that you spend time trying to convince people that they should move from on-premises to the cloud, and then that you have the right solution for them, and then you pick a set of projects that you get experience on, and sometimes they use systems integrators, sometimes they use our own professional services, sometimes they're doing it themselves. Then there's a next tranche of migrations, and those migrations just take time. And some companies get through them really quickly, and some companies take longer to get through them. And what happens a lot of times too is that they get excited and enthusiastic about the cost advantages and the speed of innovation advantages they get moving to the cloud. And what was supposed to be a smaller next tranche turns into a much larger next tranche. And all of that has been true for a long time. It's very hard for us to predict because it really is contingent on what enterprises, how they want to sequence it and resource it. Then you throw in AI, which has its own very fast growth cycle, particularly in certain types of use cases, and those change. I mean, I'll give you just some examples. In the early days of, on the earliest days, I should say, of AI, what you've seen the most amount of has been initiatives that get you productivity and cost avoidance. And we've seen that from so many of our AWS customers. And we're doing a lot of it ourselves inside of Amazon using AI. And then you've also seen, I would say, large scale training. With a lot of those are running on top of this as well. And as you know, Anthropic is running their, building their next few training models on top of it, our Trainium 2 chip on AWS. And then you've seen a couple really big chatbots. And then what you've seen just in the last few months is really kind of the explosion of coding agents. And if you just look at the growth of these coding agents the last few months, these are companies like Cursor or Vercel, both of them run significantly on AWS. But just look at the growth of that over the last few months. You just couldn't have predicted that sort of growth. And so that's why it's lumpy. Sometimes you'll have, very significant increases that you didn't predict and you couldn't forecast. And then, they'll grow at a good rate, but maybe not the same rate before the next big kind of explosive growth. And I would tell you that everything I just mentioned, what's interesting in AI is that we still haven't gotten to all the other customer experiences that are going to be reinvented and all the other agents that are going to be built. They're going to take, the role of a lot of different functions today. And they're so, even though we have a lot of combined inference in those areas, I would say we're not even at the second strike of the first batter of the first inning. It is so early right now. And then I would just say on the how to think about relative growth rates, you always have to, the year-over-year growth rate is really only a function of the percentage growth on the base with which you are operating from. And we just have a very, a meaningfully larger base on the technology infrastructure side than others. And so when, it's still, if you think about 17% year-over-year growth on a $117 billion revenue run rate, it's still pretty significant growth. And as I said, I think we could be doing more if we had more capacity, and I expect that to, the capacity to ease in the coming months.
Thank you. Our next question comes from the line of Doug Anmuth with JP Morgan. Please proceed with your question.
Thanks for taking the questions. One for Brian, one for Andy. Brian, just maybe to follow up on AWS, but more on the margin side. We've seen a lot of fluctuation over the last couple of years and now hitting almost 40%. Maybe you can just talk about what's driving the outperformance and then how we should think about normalized margins going forward. And then Andy, your comments on Alexa about moving to more complex tasks. Can you talk about that more and just, with Alexa, the products have been around for a long time and they've had different use cases. How do you get users to shift their behavior more with Alexa? Thanks.
Thanks, Doug. I'll take your first question. We did a strong quarter in AWS, as you mentioned, the margin performance. I would attribute it to the strong growth that we're seeing, coupled with the impact of some continued investment we're making in innovation and technology. Give you some examples. So, we invest in software and process improvements, and it ends up optimizing our server capacity, which helps our infrastructure costs. Been developing more efficient network using our low-cost custom networking gear. We're working to maximize the power usage in our existing data centers, which both lowers our costs and also reclaims power for other newer workloads. And we're also seeing the impact of advancing custom silicon like Graviton. It provides lower costs not only for us, but also for our customers, the better price performance for them. But you're right, margins are impacted by a lot of things, including our level of investment, competitive pricing, the mix of generative AI services as they're ramping up will continue to evolve over the years to come. So we do have a lot of investment in infrastructure going on and planned for the second half of the year. So that will, we'll start to see the impact of that. But we're happy with the performance of the team with generating cost savings. And it's a big focus as well as expanding the services and features for customers.
On the Alexa question, we're really excited about Alexa Plus. And, as I mentioned earlier, It is she's much more intelligent, much more capable, and able to take real action. And to date, most of the agents that have been out there have really just been able to answer questions, which when it came out was very remarkable. And but it's I think the future of agents is not just being intelligent, but also being able to take action. And that's actually, it requires a great model, but it also requires the ability to sync that model and to align that model with being able to take the right action and execute and implement the right APIs, or you can have very suboptimal results. And so we've worked hard on that in Alexa Plus. We've started rolling out over the last several weeks. It's with now over 100,000 users. With more rolling out in the coming months. And so far, the response from our customers has been very, very positive. People are excited about it. I think that it does a lot more things than what Alexa did before, and we're very fortunate in that we have over 500 million devices out there in people's homes and offices and cars. So we have a lot of distribution already. But there will be, to some degree, there will be a little bit of rewiring for people on what they can do, because you get used to patterns. I mean, even the simple thing of not having to speak Alexa speak anymore, where we're all used to saying Alexa before we want every action to happen. And what you find is you really only have to do it the first time, and then really the conversation is ongoing, where you don't have to say Alexa anymore. And I've been lucky enough to have the alpha and the beta that I've been playing with for several months, and it took me a little bit of time to realize I didn't have to keep saying Alexa, and it's very freeing when you don't have to do that. And then I think it's just experience in trying things. So you can do things like you have guests coming over on a Saturday night for dinner, and you can say, Alexa, please open the shades, put the lights on in the driveway and on the porch, increase the temperature 5 degrees, and pick music that would be great for dinner that's mellow. And she just does it. And like when you have those types of experiences, it makes you want to do more of it. When I was in New York, when we were announcing it, I asked her what were we did the event way downtown. I asked her what were great Italian restaurants or pizza restaurants. She gave me a list, and then she asked me if she wanted me to make a reservation. I said yes, and she made the reservation, confirmed the time, and like that. When you get into those types of routines, you have those types of experience. They're very, very useful. It is really like having a great personal assistant, which most people in the world don't have. And so I think that the more and more that people get used to it, they will realize what she can do. And we're not going to be standing still. We have a lot more functionality that we plan to add in the coming months too.
Where's the CapEx question,
Thank
bro?
you. Our next question comes from the line of Brian Nowak with Morgan Stanley. Please proceed with your question.
Thanks for taking my questions. Hey, Andy and Brian. So I have one for each of you guys. So, Andy, you have a very complicated retail business with a lot of moving pieces to it. I imagine you have a lot of good data on what you expect demand to be over the course of the year and the holidays and things. As you kind of step back and analyze the business and the tariff uncertainty, can you just sort of walk us through the one or two key areas operationally that you're most focused on, just to ensure that Prime Day, Thanksgiving, and the holidays go as smoothly as they possibly can? And then secondly, on Brian, just to kind of go back to Eric's earlier question, as we think about the 2Q EBIT guide, are there any one-time costs or sort of tariff-related costs in there similar to that $1 billion that you called out in the first quarter? Thanks.
Thanks, Brian. On the retail question, I would say that the areas that maybe we're most focused on to make sure we have, not just a great Prime Day, but Prime Day is just one event, as you know, and so is peak. We're trying to be great all year long for customers. The obvious ones are making sure that we help our sellers however we can, because there's uncertainty for our sellers as well. So we're trying to make sure we provide a great experience. We're trying to make sure that we have the right diversity of sellers and low prices for our customers. I think all that you have to also be very thoughtful around how much inventory you bring into your fulfillment nodes at any one time, because you can imagine scenarios where either on your own when you're the first party seller or lots of third parties.
Apple's getting hit now, down almost 4%.
Want to get as much, trying to beat a deadline on what may happen. And if you end up with too much inventory in your fulfillment network, it really slows down your productivity and your ability to get things out as quickly as you want for customers at the cost structure you want. So being able to manage that thoughtfully, we've learned that over the years, and I think the team is doing a really good job of balancing that right now.
And Brian, on your question about Q2, I guess I'll just reiterate what I had said earlier. We had stock-based comp step up, which I think you can see the normal pattern for that. If you look at our history, we have additional Kuiper expenses. Specifically, you asked about tariffs. We do have tariffs that we'll be paying on retail purchases based on current tariffs. It's not large in Q2. We had done a lot of pre-buying of inventory in Q1, as I mentioned earlier. But just generally, I think with the uncertainty, we've added a bit to the range that we've given you. We generally have a wide range, but just the general uncertainty that we're seeing and uncertainty of consumer demand and everything else is causing us to increase the ranges a bit. So we'll see. We feel it's an informed view of Q2 right now. As Andy mentioned earlier, we saw actually some strength in April based on what could end up being some pre-buys of a number of things, but and advertising has been strong. So we think there's a lot of positive trends, but certainly uncertainty right now for the quarter.
Thank you. And our final question will come from the line of Brent Thill with Jefferies. Please proceed with your question.
Thanks. On AWS, I'm curious if you could give us the backlog number. And Andy, to your point about many of these core workloads still yet to come to cloud, can you just update us in what you're seeing? Are you seeing enterprise strength back? Are you seeing some confusion with AI clouding that transition and the timing of that? Just give us a perspective on what you're seeing on that migration. Thank you.
Hey, this is Dave. I'll just jump in on the backlog and turn it over to Andy. The backlog is $189 billion for Q1. That's up about 20% year over year. And the weighted average remaining life on that is 4.1 years.
On the AWS question, Brent, around what we're seeing on the workloads that haven't moved, what I would say, the way I would characterize it is that we were on a very aggressive march that was methodical, but almost metronomic before the pandemic, of enterprises deciding that they wanted to move off their on-premises infrastructure because of the speed of innovation, the developer productivity, and the cost advantages of the cloud. And then when you got into the pandemic and the economy looked uncertain in the second half of that few years, you had everybody trying to cost optimize, and including us, by the way. And then as we started to emerge from that trend, you saw generative AI explode, and everybody wanted to try to find a way to have a workload or a set of workloads there because people saw the potential, and it was also something that was generating a lot of interest publicly. And so what we've seen now over the last, call it 16 to 18 months or so, is that enterprises realize they need to do both. And they want to do AI. They have all sorts of pilots at this point on AI, many of which will be successful, others of which will not be successful. The ones that are successful will scale, but they also have a lot more initiatives that they haven't, that they still haven't gotten to on the AI side, either because they're building that skill set, or they're picking a first set to get experience with, or as they're waiting to see the cost of inference continue to go down, which it will. I mean, you will not get the expansiveness that we all know is coming in AI until we keep getting the cost of inference down, even though it's growing like crazy right now. But at the same time, I would say that we see an increased resurgence and understanding for enterprises that they are dropping the low-hanging fruit if they don't move their infrastructure to the cloud. They just, for all the reasons I mentioned earlier. So you're starting to see those plans pick up again. As I mentioned earlier to one of the questions, you don't decide that you're going to transform your infrastructure from on-premises to the cloud and see it happen in 3 months. That is typically a multi-year process that some companies do it fast, some companies do it slower, but they do it in tranches and they do it thoughtfully because they can't afford for their applications not to work as they're making their transition. And we're having meaningful success in those conversations and in companies choosing to transform their infrastructure on top of AWS. And I think that you'll see that moving forward too.
Thank you for your time joining us today and for your questions. A replay will be available on our investor relations website for at least 3 months. We appreciate your interest in Amazon and we look forward to talking with you again next quarter.
Bro, what?
And ladies and gentlemen, that does conclude today's.
That was the quickest Amazon call I've ever heard. Hold on. Wait a second. We didn't get CapEx. The analyst didn't ask about CapEx. I remember last time that call went on till almost 6:15. It's 5:50. Like, I only think we got 3 questions. We didn't even get. That was weird, right? It's not just me. That ended way earlier than I expected. It's not like last time. Is Apple still going? Is Apple still freaking going? Let's see. Apple's still going. They're doing Q&A. All right, let's go to Apple. I did not expect Amazon. I'm going to try to get this CapEx number, but no one has it right now.
Your opinion.
Well, on the data center side, we have a hybrid strategy. And so we utilize third parties in addition to the data center investments that we're making. And as I mentioned in the 500 billion, there's a number of states that we're expanding in. Some of those are data centers. And so we do plan on making investments in that area, and we're not gating it. It's we invest in the business first, as Kevin talked about, is our most important thing to do. In terms of the foundation models, we want to have certain models, and we'll partner as well. And so I don't view it as a all of one or all of the other. We've been working on foundation models for quite some time, and are shipping some today, obviously, with what's on device and what's in the private cloud compute.
Yeah. And then as a follow-up, I'm curious with the iPhone 16e, launching this quarter, internalizing your C1 modem. I'm curious of how you see kind of, the modem strategy playing out, or maybe just the continual deepening of that internal silicon opportunity for Apple.
We're super excited to ship the first one and get it out there, and it's gone well. We love that we can produce better products from a point of view of really focusing on battery life and other things that customers want. And so we have started on a journey, is the way I would put it.
Thank you.
Yep.
Thank you, Aaron. A replay of today's call will be available for 2 weeks on Apple Podcasts, as a webcast on apple.com/investor, and via telephone. The number for the telephone replay is 866-583-1035. Please enter confirmation code 3729688, followed by the #. These replays will be available by approximately 5 p.m. Pacific time today. Members of the press with additional questions can contact Josh Rosenstock.
Dude, what is all this? Just post the call on YouTube. What is this confirmation call. Just freaking post the call on YouTube. Like, what is going on here, bro? And where are the closing remarks from Tim Cook and Jassy? I mean, they usually do closing remarks, right? Like you give it back to the CEO. They say, thank you for being here, yada, yada. We have a growing business, blah, blah, blah. And then it's over. This was a weird day for Apple and Amazon. Amazon is never that quick. And where the hell is this freaking CapEx number? Apple right here, down 4%. The headline on Apple is Tim Cook said there will be a $900 million cost due to tariffs. We didn't hear it because we were on the Amazon call, but that's what he said. $900 million they expect to lose due to the Trump tariffs if they stay. So they got to not stay. Oh, that's not for Q3. That's for Q2 this quarter. So Q2, we're in Q2. That's $1 billion hit for Q2. So that's why the stock's right here down about 4%. The analysts will take down their revenue estimates by $1 billion if the tariffs still stay. And then Amazon, not as bad as it was before, but I mean, dude, down 2% is really nothing. I mean, this thing goes up or down 2% every other day. So this is not that big of a deal, but the call was weird. Jassy was great in terms of explaining the AI future. Was anything that new that we haven't heard before? I'm still waiting on this CapEx number. And last time they just said the number. You didn't need a question for it. So I'm like, I'm like so confused right now. Like, I don't get it. I really don't get, like, how do they not reiterate CapEx? I believe the guide was for $104 billion. You can correct me if I'm wrong, for fiscal year 2025. Google reaffirmed it. Meta raised it. Microsoft guided basically in line. Reddit CEO, dude, I don't know what the hell's going on with the Reddit CEO. I mean, the Reddit, that thing was up 18, got demolished right here. Now it's up 3. At one point it went negative, so it's still holding on to a little bit of a pump, but that was a day trader's dream. If you bought it right before earnings, make 20% on your money within minutes. And then it got hit. Yeah, Apple never gives guidance. That's fine, but Amazon definitely gives fiscal year guidance. And I'm trying to figure out if anyone has this CapEx number. I don't see anyone that has it. And I'm very confused where this number is. I don't see it anywhere. I'm looking at a lot of different areas. I don't see it anywhere. That's weird. Yeah, these calls were not as good as Microsoft and Meta. Microsoft and Meta, they crushed it. So, I mean, look, again, Apple and Amazon, amazing companies. Whether the stock goes up or down a couple bucks is irrelevant, but they weren't Microsoft and Meta types of quarters. Meta right here down about 1%, Microsoft down 0.16, S&P down 0.3. We did see a dump going into the close. S&P was up at 562 today. It dumped all the way to 558 by the end of the day. Palantir down 0.5% after hours. MicroStrategy up 0.37. Atlassian dumped as well, down 16%. Ugly dump. Instacart's still up 4%. Duolingo's up 9%. GoDaddy's now down 6%. Roku's down 5%. Airbnb down 5%. And then Twilio up 7.9%. So most of these smaller growth stocks got some momentum. Reddit's kind of holding on to that 4% from 117 to 140, now back down to 123. But Apple and Amazon really not getting too much momentum. Amazon down 2% and then Apple down 3.8%. I cannot call Steve, guys. He's in meetings. He's in work. He can't just pick up. I also don't think he even looked at Block's earnings yet. He would have, trust me, Steve would have texted me if he actually, like yesterday, he wanted the text he sent yesterday. He would never say this publicly, but this is it. He said, Meta dropped their cock on the table. He texted me at 4:10. That's how I knew he was paying attention. The fact that he hasn't texted me since 4 p.m. means that he probably is not even looking at earnings right now. So we'll talk to him tomorrow, though. We'll talk to him tomorrow, and we'll see what they have to say. Moon Money, thank you for the $20 super chat. Appreciate it. I definitely need to get some tea. I had a little bit this morning. I've been eating Halls all day, trying to help out with the throat, but hopefully it's back by tomorrow. All right, cool. So that's it for earnings. Big Tech is now done. NVIDIA, May 23rd. So NVIDIA's going to take some time. My Palantir expectations, I'll come out with a video this weekend. Palantir Weekly, we'll be talking about that as well. So we'll talk a lot about earnings expectations. I think it's going to be a good quarter. I have no idea what the stock's going to do because the stock has been jumping so much. So, yeah, like I have no idea what to expect from stock, but in terms of the company itself, I will get my projections real quick. If you guys missed it today, I showed it on the open, but This is one of the reasons the stock might be pumping the way it is in terms of Palantir. There's a company that tracks government contracting, and in Q1, government contracts tend to be worse than like Q3, Q4 because it's offloaded towards the rest of the year. Palantir, based on this website, procure.fy, and I actually know this website, so it seems rather legit. It's not perfect, but it's better than most. They have their largest ever Q1. So if that's the case, over 120 million bucks, that government growth could be pretty incredible. And that could be a big beat that we get on earnings as well, along with US commercial. So yeah, that's what we got. That's what we got. Jackson, thank you for the $10 super chat. Hey, Amit, do you think third-party hyperscalers like CoreWeave and Nebis Group will benefit from increased CapEx? Yes, 100%. I mean, their entire business model depends on increased CapEx. Jose was on the show today. He actually bought CoreWeave over Nebis. He likes Nebis as well, but CoreWeave was just, from his perspective, financially a better buy. I think CoreWeave was up 10% today as well. I don't own any of those names, but yeah, in the AI CapEx lifecycle, obviously I think NVIDIA is the big winner, but some of these other names definitely can win. CoreWeave was up 7.3% on the day. Oh, it's 28th? Okay, May 28th then. So we got a month until freaking NVIDIA earnings. We got some decent time. Next week is still going to be a big earnings week. Let me just see what we got next week. And then we can end off the show today by watching the Vlad interview. They did a new one on CNBC, so we can watch that to end out the show. Tomorrow we have Eli Lilly. No, that's today. Tomorrow we have the oil companies and Fubo. And then next week, the big earnings we have are obviously Palantir. Then you got Celsius, Hims, DraftKings, Cloudflare, Coinbase, Pinterest, Lyft, Monster, HubSpot, Dropbox, SoundHound, Shopify, Warner Brothers, Disney, Uber. So you got some big names. Palantir is like the biggest one for most of us, but all of big tech is now done. Oh, AMD. Okay, yeah, I will not forget about AMD. That's for damn sure. You guys will freaking cut my neck off if I don't mention AMD. When is AMD? AMD is on Tuesday and SMCI at the same time. Wow. SMCI and AMD at the same time. All right. That's going to be a big one. Yeah, we'll look at Rocket Mortgage on Thursday as well. They have earnings. And then Hims is on Monday, so that'll be important. With Palantir on Monday. But Palantir is going to be the big one. That's going to be our Super Bowl. And we're going to see what they can do. Look, again, the only reason I'm a little anxious for Palantir is because I know a lot of people want to see the stock go up, but the stock's been up a lot. So I hope there's some objectivity here. And if the earnings are good, but the stock doesn't reflect it, I just hope people realize the stock is up 70% from the lows. So it might go down after a good earnings. It might gap all the way up, but I think the stock performance is irrelevant. I just want to see the company keep progressing. And that I'm very confident for. Very confident the company is going to progress. I don't know what the stock's going to do. But it's a unicorn. And it's been acting like a unicorn. If the macro doesn't go crappy, I don't think it has to come back down. And so if we have a freaking, one of those gangbuster quarters, like where Karp is like, yep, we're freaking doing it. And we're doing it at a level that is unprecedented, then I think we could see some crazy momentum on Palantir, even more than what we've seen over the past couple of weeks. And Monday, we're going to see. Beepster, thank you for the 20 pounds. I appreciate it. Get some tea, buddy. Hoping to see you in London in June. Yes, London in June. That is the priority, along with France. Still waiting on some details, but I think London and France we're going to be doing in June. Houston in May. And then July, we'll figure out what we got to do and where we got to go. Maybe Miami, July. All right, cool. So we'll end it off with the Robinhood Vlad interview. And that will be it today. Again, thank everybody for being here. Amazon and Apple, good earnings, not necessarily great earnings. And that is why the stock reacted. Both those stocks reacted the way they did. Overall, still a strong showing by those two companies. All right, here is Vlad for Robinhood.
To us and buy their first stock with us, and they build portfolios. But in terms of what drives the revenue, active traders trading, options and crypto, and increasingly now futures trading, and diversifying the business beyond just trading. We now have 9 business lines generating over 100 million, with a bunch more that are kind of rising, recently created business lines that are now coming into more significant scale. We got index options, futures, prediction markets, all around the 20 million revenue mark, even though they launched just a few months ago. And with the Trade PMR acquisition, we have another business that's double-digit millions, but we expect to grow actually quite rapidly in the coming years.
It was interesting to see sort of the evolution of the business, and you talked about the diversification, but how many other business lines are actually contributing now, and also the net deposits number. But while we're talking about equity, so that's sort of a reflection of free trading, fees are lower, spreads are thinner. But as far as equities, as far as crypto, how are you thinking about the spreads? How are you thinking about how much you're charging? Because that has actually also evolved a little bit as well. You're now charging more for crypto trading.
Well, I'd say it's getting a little bit more sophisticated, how we actually think about pricing it. The way I actually think about it is we want to be competitive across every tier of activity, from beginner crypto traders who are just getting into the asset class all the way to advanced, incredibly sophisticated traders. And our pricing for crypto has historically been sort of a one size fits all. Everyone pays the same and gets the same sort of like treatment regardless of whether you're trading a lot with us or very little. And I think that's evolving to a much more customized.
Bro, Japan just said, their finance minister, by the way, futures basically opened down 0.5% across the board. Our U.S. Treasury holdings are a card we can use in trade negotiations. Whether we choose to use that card is a different decision. If Japan actually tries to sell treasuries, it's going to get ugly because Trump's going to hate that. And I don't think Japan would be dumb enough to do that. I don't think that they can use a lot of things for leverage. I don't think they should be using our treasuries. But yeah, there you go. Finance minister saying, hey, treasuries are on the table to negotiate.
Model where,
by the way, Japan owns $1 trillion of our 30 trillion in treasuries. So if they dump it, that's not a good thing.
The more customers trust us with their assets and their crypto trading activity, the better deal you get. And I'd say that that's more of a strategic shift for the company across the board, not just with crypto. We want to be a financial services product that actually gets better for you and more compelling the more assets you have and the more transactions you run through us. And I think traditionally financial services go the opposite way. For example, if you take financial advice, if you're paying a fixed 50 to 100 basis points, then you pay more the more money you have with the service, and the service quality doesn't tend to scale with that. So I think that's just one of the things that's fundamentally broken about the industry that we're trying to fix over time.
Are the more sophisticated traders that you're going after, that you're trying to court, also trading crypto?
Yeah. There tends to be a lot of, the most sophisticated traders tend to be multi-asset. And in fact, they jump around from asset to asset depending on the particulars of the market environment. So I'll give you an example. Futures trading, new product for us at Robinhood, opens up a new realm of possibilities for traders because it's a round-the-clock market. It trades 24/5, and also it allows you to take short positions. So if you have a bearish view on macro, you can now execute on that round the clock with futures trading. And we have commodity futures, crypto futures. We offer a broad range. In April, when we saw a ton of volatility, we had over 4.5 million futures contract traded, which was more than all of Q1.
Wow. So the volatility helping other parts of their business, even if it's not helping the equities trading, it's helping futures trading, which takes advantage of that volatility for more sophisticated traders.
Actually. So in the past, when the markets were going sideways or down, our active traders didn't have too many capabilities to actually trade that. But now with futures, it opens up just new abilities for our traders, and you see them engaging.
What does that mean for the state of the markets, I guess, for individual investors? I would think of trading crypto on weekends, for example, and using it as a hedge. What does it sort of signal about the state of of general markets, of retail investors, if they are sort of implementing these different strategies, but crypto is part of it. You're not just a pure play crypto trader.
Yeah, I think that, I mean, what's going to happen in the future is everything's going to evolve to 24/7, and some assets might happen more quickly than others. I mean, futures is close, crypto's already there. Equities, we now offer 24/5 access across over 1,000 symbols, including all of the major ones. And I think as markets become more global, as we continue to export, financial services around the globe through crypto technology and also just conventionally, and we're doing a lot of that, 24/7 will become even more critical. Because if you're a trader or even an investor in Asia, the overlap with East Coast working hours is very, very small. So those customers will actually demand it more and more, and that'll push the markets here to evolve faster.
Is there a generational divide where you see younger traders sort of trading crypto and equities and futures in one bucket? And does it differ for sort of the older traders that you're also trying to bring on the platform?
Yeah. I think that as we've gotten more sophisticated, as we've improved the service model, we're starting to see higher net worth traders and investors coming in who do tend to be a little bit older. And that's really where we see a huge opportunity. A couple of years ago, if you had 10 million plus in your account, admittedly, Robinhood wasn't meeting all of your needs. And we really focused on that customer starting back in 2022, but increasingly over the years. And I think now it's actually a great platform for those with 10 million plus. And we keep adding more and more support, functionality, features, while maintaining the accessibility to someone who's just starting out. I think that's been like a design and product challenge, but I think we've been able to thread the needle. And what we see is, if you rely on brick and mortar, if you want to go to the local store and, engage with a financial, a broker, Robinhood's probably not the best fit for you. And those customers do tend to be a little bit older, but you have a lot of older customers that understand technology deeply and do like to be on the leading edge. And for them, they've been coming to Robinhood in larger and larger numbers. So that's been great to see. And
they're open-minded when it comes to crypto. They don't see it as sort of this other asset that they're not going to incorporate in their main portfolio.
I think everyone, pretty much everyone that I talk to is at least interested in studying it, and an increasing number of people are putting it into their portfolios. And now there's more ways to do it. You have the ETFs. So, if you want the traditional protections of the equities market, you can go through the ETFs. We have crypto futures for active traders. And, for folks that want to take a short position, that has been an effective tool. And then spot crypto, we continue to make progress there, adding more assets and actually utilizing the technology to help with other financial services. So we're getting ready for a big crypto event that we're going to be holding in France. And there we're going to announce some new products and new things you can do with crypto technology.
Is this sort of the new normal going forward? Do you expect crypto and options to make up as big a percentage of at least transaction-based revenue as it did in the first quarter?
I think that I don't really try to optimize for the percentages. I think the broad trend will be the business is going to continue to diversify. And ideally, as we diversify, each of the individual segments will continue to grow as they have been. I mentioned earlier, we have 9 business lines at 100 million plus in annual revenue. And that's up from, much lower number a few years ago. So, the business itself is growing. Crypto is continuing to grow individually, but, we have more segments that are firing. And then even within crypto, I think you'll see it diversify among outside of transaction-based revenue. So you'll see more crypto net interest revenue in the future as we continue to increase the selection, the number of things you could do with crypto, and also as it grows internationally.
How would you describe the state of the retail trader amid all of this volatility? What have they been buying? Has there been this consistent dip buying that we've seen? Give us a little bit of a look under the hood, if you would.
Yeah, I mean, net deposits have continued to be strong. You saw the 18 billion number for Q1, and that's continued into April. Trading has continued into April at multi-year highs for some assets, all-time high for futures, where futures trading was bigger than all of Q1. So I think that there's some customers that tend to be buy and hold, and they buy the dip and accumulate during times of uncertainty when markets are down. There's some traders that are looking at it systematically, and they're kind of like looking at the news, looking at the macro, looking at what's happening with tariffs, and they're sort of like trading it on a daily basis. So it's just with 25 million customers in the US, you get a lot of different behaviors and activity.
Is that sort of changing as the demographics change on Robinhood? You started really, as you said, as sort of just pure equities, younger first-time traders. As you get more sophisticated, is it harder to sort of lump them together and say, here's what the average trader is doing?
I think it is. Also, as people put more and more of their assets into Robinhood, it used to be that Robinhood was kind of your discretionary small account, but now, we've got customers moving in 90,000 plus on average with some of the work that we've been doing on the account transfer side. And those customers actually split their money into multiple buckets. They might have a retirement account with us, a joint account with us, and of course, an individual discretionary account. And in those cases, part of it's passively managed. And we're adding more functionality for that. Robinhood Strategies, which is the digital advisor that we launched at the Gold event, that's been getting quick adoption to 40,000 customers with over 100 million in assets relatively quickly. So yeah, you're seeing it kind of serve multiple financial needs for one individual. And I think that's when it becomes really, really interesting, because you can't even talk about an individual trader. It's sort of like pools of money for one trader.
What about the options boom? We've talked about that as well. And I've noticed that in the last year or so, and especially since Robinhood has gotten deeper into the options market. What does that signal, if anything, about the market? Is it, or at least your traders, is it traders graduating, or is it that more sophisticated trader sort of moving on to Robinhood? Give us a little bit of a lens into the options activity.
I think there's a little bit of both. So we've added new capabilities to options that traders needed from us very clearly. So index options launched a few months ago, and we've rapidly been growing market share in that. Robinhood Legend launched with option support, and a lot of the Robinhood Legend activity, which is our desktop platform, appears incremental so far. So that's desktop activity that wouldn't have happened on Robinhood had it not been for us launching Legend. So, we have customers that had Robinhood accounts that were doing trading elsewhere that appear to be moving more and more of that trading activity to Robinhood. And then we also have a steady stream as we onboard new customers of people trying out options with us for the first time.
What about really short dated options? So the 0 days to expire, relatively new on Robinhood as well. Do you worry at all about the risk and some of the education required with something that can be that risky, can also be used as a hedge? But how are you thinking about introducing that to a new class of investors?
Yeah, I mean, our customers have been engaging in same-day expiry options for quite a while. I think we initially rolled that out in 2020. And what you see there is capital efficiency. I think at the end of the day, our customers, particularly the ones that tend to drive a disproportionate amount of volume, they're smart. They come to us in large part because Robinhood is the most effective capital efficient way to place some of these trades, not just with zero commissions and no contract fees, but margin rates and just the economics across the board are superior. So you tend to get a sophisticated customer that understands the fees that they're paying. And even more, a lot of these active traders are like incredibly sophisticated about taxes. So when tax season comes along, like there's a ton of folks trying to optimize and just having an encyclopedic knowledge of the tax code, which pushes us to be at the top of our game there. So the reason they engage in these same-day expiry options trades, because that's the most capital efficient way to engage in the strategy they have in mind, which can be, trading around an announcement or earnings or some other event that they expect to happen, and they don't want to deal with the time decay.
And then finally, on all of the volatility and uncertainty, it's definitely moved your stock. How are you managing the tariffs? What's going on a macro level as a CEO? How has it been trying to forecast for the future when it's really hard to plan right now?
Yeah, I mean, for us, we're fortunate because we're not subject to tariffs, right? We're not transporting physical goods, and our strategy is really just to focus on active traders while also diversifying the business and adding basically more and more things for customers to be able to do with their money. We think Robinhood can be the place to serve all of your financial needs. So, if you want to buy, sell, or hold any financial asset, conduct any financial transaction, and increasingly, if you're not just retail investor, but also a business and an institution, Robinhood should be able to serve those needs. And we're still quite small. I mean, 220 billion in platform assets, still not yet $250 billion. And there's going to be 100+ trillion changing hands to younger generations. So we're still very much at the beginning of our arc as a company.
And then finally on banking, that's another area of focus for you guys. How are you thinking about credit risk and credit quality with the macro backdrop and some of the talk around a recession?
Yeah, I mean, we're being cognizant and careful of that. The thing is, I mean, the good thing about us being relatively early in the credit rollout is, even though we've doubled the number of card holders on the credit card, it went from 100,000 to 200,000, and we're going to accelerate that over time, but it's still at a pretty early stage, and so credit risk, it's really an opportunity for us to make sure our models are robust, and we continue to improve that. But we love what we're seeing, and the scale of it is sort of still pretty nascent. So yeah, not worried about that. Banking, very exciting. The credit card app will turn into the banking app, and I think that'll be a great product for high-end customers and also for college students and people that are just getting started.
Yeah.
So that's going to be rolling out in the coming months, and I think that's going to surprise people in a positive way, actually.
Really interesting trends for the quarter. We'll leave it there, Vlad. It's great to see you. Thanks for coming in today.
Yeah, thanks for having me.
Appreciate your time.
All right, that was Mr. Vlad Interview of Robinhood. So good stuff, dude. Good stuff. Obviously, stock didn't really do what everyone wanted it to do today, but it happens after earnings. Overall, companies doing what they got to do, and the volatility of the next few months. Robinhood right here down about 1% after hours is going to be something that could be a negative catalyst for Hood and for the markets, and we're just going to have to see where that volatility shows up. I think Jay Powell's going to have to cut rates in June. If he doesn't cut in June, right now people are saying this could be a Trump recession. If Jay Powell doesn't cut in June, they will be saying it's a Powell recession. And I think Jay Powell knows that. So we're not going to get the May cut. Someone was asking me about my thoughts on non-farm payrolls tomorrow. I think they're going to be kind of ugly based on the private payroll ADP data we got and the initial jobs claims that we got today. But as ugly as they are, they will tell Jay Powell it's time to cut. And they will tell Trump it's time to walk back the tariff stuff because, yeah, Jay Powell's got to cut. But also, if we keep getting negative job reports, people are going to look at you. You're the president. And a lot of people are going to blame the tariffs. So I think if Jay Powell's too late, they'll blame Powell. He gets another month of grace. But if Trump keeps this trade war going for another couple months, everyone's going to blame Trump. So I would imagine that we get cuts in June and hopefully we get a trade war resolution by June. I mean, you got Lutnick and Bessent saying that we've got deals lined up. Now it's just a question of actually getting them to happen. But this is weird, right? The Japan finance minister comes out saying, hey, we can use treasuries in a negotiation. I thought we were in great conversations with everybody. Now you got Japan saying, well, we've got an asset that we can use, which are U.S. treasuries, which means obviously we're not really close to a deal with Japan if they're putting out statements like that. Maybe with India, but we just don't have confirmation on that deal yet right now. Do you think Robinhood might add support for Canadian security exchanges? They might. They've added a lot of different asset classes over the past couple of years, so I could see that definitely happening. I don't think they're coming to Canada anytime soon, and that's because the provinces in Canada all have different. You know what I found out yesterday? The provinces tariff each other inside of Canada. So they all have different financial regulations, which is why it's really complicated for Robinhood to just be able to go to Canada because there's all these different provinces you have to deal with. But I found out yesterday the provinces tariff the provinces themselves. So it's like, and that would be like states tariffing each other in the United States. So it is definitely tricky for a financial product to enter into Canada in a meaningful way. And I don't think it's going to happen. I mean, the fact that they're going to Singapore over Canada just shows you how much easier they think it is going to be able to launch halfway across the world versus to our neighbor up north. So, all right, cool. That's it. We will get a daily recap. I'm sorry we haven't had it for the past 2 days. I still kind of can't really talk, but we'll get a daily recap out today. And then Friday, we made it throughout the entire week. May 1st, Friday, tomorrow, we got the market open as usual, and then Palantir Weekly tomorrow after the market close. And then we get into Palantir earnings on Monday. I sold Palantir covered calls at 100 expiring 5:30, which you rolled them before earnings. Yeah, I mean, dude, here's the thing about covered calls on Palantir. They haven't really worked, right? I mean, they worked a little bit earlier in the month, but they haven't worked for the past year and a half. I think I would roll them to try to get break even, maybe pay a very small debit, because the risk of it running is like, here's the thing. There's a set of people in the world. Like, for example, let me show you guys. I mean, you guys remember Sasha? Every time I want to leave, bro, you guys make me stay in. I don't know what it is, but I can't leave. I'll be freaking 80 years old live streaming. I'll be like Trump, right? Trump's basically 80 years old live streaming. But Sasha, this guy, right? This is his take on Palantir, okay? This is his take. He sold at $8, okay, in August 2022. He used to be part of the Palantir community. I did a podcast with him in the early days, but then he sold when Carp banged on the table, so he got out of it. It is what it is. I don't really care that he sold. You know, people get out of certain stocks. It is what it is. But he said, we are so back 100 times price to sales on a company growing at 30%. Let me get my popcorn for the inevitable Palantir fan club telling me I am salty for not being part of the biggest bubble in stock market history. Okay, so you've got people like that think you are insane to think that Palantir can go above $100, which is the strike that you have on your covered call, because it's already trading at 100 times price to sales, right? So Sasha would be like, forget $100 and forget 120. Like this thing should be back to 30 or 40 or whatever. Then you've got other people that say, like me, which I would say I'm pretty objective, even though I obviously am biased towards the company, which is saying, hey, it's very expensive. No one's denying that. But given all these qualitative factors that I've talked about for the past couple of years, there is a unicorn element to this company that allows it to trade at these levels. And I don't think it's just retail. I don't think retail is pumping it the way that it's been able to move. I think there's more serious institutional investors that are looking at the government business, commercial business, AI, enterprise business, and they're saying, hey, we kind of don't care about valuation. We just want to take a bet. So to answer your question, $100 strike, could that be in trouble? Yeah, in earnings, because Palantir could put some crazy numbers up and the valuation gets even, more intense in terms of its ability to react to those earnings. But also, could Palantir put up some crazy numbers and then 100 times price to sales? We're not talking about earnings. We're talking about 100 times price to sales. Could that go down to, 60 times price to sales, 70 times price to sales? Yeah, even with good numbers. And I think we're going to have this discussion on Palantir Weekly. But the point is, it's really hard to sell covered calls on this thing because you've got the numbers that don't really make sense to be worth more than Salesforce. I mean, I think anyone objectively can say that. But you've also got a unique narrative and story that keeps people so engaged in Palantir. Again, and people try to downplay this, bro. Like when I talk about it with Robinhood and SoFi, like I was last night, people like, oh, what do you mean, Amit, that SoFi doesn't care about individual investors? That doesn't matter. They're a business. They need to make money. It's like, yeah, but the excitement and energy of getting Vlad to do a podcast with a retail investor and getting that distribution, that matters. And if you can understand that, all right. But there's a reason Adobe, Salesforce, Snowflake, Datadog, all these software companies that to an extent have better revenue growth rates than Palantir, at least not right now, but they did in the past, right? They never developed the retail audience because no one gives a hell about them. We care about Carp, right? We care about Palantir. We care about the story. So that is what I think Sasha never understood. And that's why he thinks it's just the craziest bubble. He's right. The valuation is, but it's such a lazy intellectual way to think about Palantir. Valuation's expensive. It's like, okay, valuation was expensive on Amazon. And dude, the amount of people in 2022, and I had nowhere near the knowledge I have right now about markets, but the amount of people that told me NVIDIA was egregiously overvalued. The amount of people that went short NVIDIA and got decimated after NVIDIA took off. I'm not saying Palantir is going to have NVIDIA type of growth. I'm just saying the idea that we look at price to sales, price to earnings, and then equivocate over. I mean, Apple trades at 35 times earnings and they're not growing, but it's Apple, right? There are other ways to understand the nature of the valuation. So in terms of the $100 strike, I would roll it, give yourself some more breathing room, maybe 120. And then if it tanks, you get to close the covered calls. If it doesn't, at least you get to exit at a higher price. Davis says, I'm in 110s for December 2026. So that's also going to be a little tough for him to get out of unless Palantir gets below that range by that time. And then Doug, who's in like $45 covered calls. Also Steve, he's in those $45 covered calls as well. They're deep in the money, right? Now, granted, one thing you can do if you're deep in the money on the covered calls is you can wait closer to expiration and then roll them. You're going to have to pay a hefty debit, but if you pay a hefty debit right now, because there's so much time on the contract, it's going to cost more. So you can give it more time to let the theta decay. But it's one of those things where those covered, I mean, realistically, I don't know if Palantir is going to be $200 by 2026. I don't know what type of growth they would have to put to get there. The management didn't even think they would get to 70 by 2029, and they're at 120 right now, right? So this is what I mean. It's like, it's not just retail investors that got it wrong. Management guided, like if you look at their SEC documents with their stock-based comp, they expected it would take basically 9 years from when they went public at $10 to get to 70. We are at 120 right now. Either that's egregiously overvalued and it's going to come crashing back down, maybe, or it is a new market in terms of how we conceptualize the nature of Palantir, and it can stay more expensive for longer and the company can grow into its valuation. But you got to be able to make that decision on your own. And I don't think there's necessarily a right or wrong answer, but the one thing I will keep saying is this is a unicorn. And the reason I keep saying a unicorn is because not every company is getting an entire NATO contract. I mean, the freaking Bloomberg thing today, I don't know if you guys saw that. I didn't get through the whole article, but Palantir's intelligence gathering truck, which is their Titan, is rated a winner by the Army. This was a big article all about their Titan product and how well it's working, which is an autonomous vehicle on the battlefield. Titan is just the beginning of the entire industrial AI revolution for military technology. It is why Palantir was able to get NATO to use Maven as an entire AI operating system for the battlefield in terms of military operations. We are just getting started with this. Does that mean the valuation is cheap? No, but it does mean there's a long runway for growth that could keep the valuation more extended. Eric says 100 times price to sales seems like a good time to sell covered calls for any company, right? Right. Sure. Right. I'm not saying it's not a bad time to sell covered calls. The premiums are juiced up the ass. I mean, if you look at the premiums right now on Palantir, by the way, Apple's down 4% now, after hours. If I wanted to buy 100 shares today at 115, that would cost me 115 times 100, $11,500. If I wanted to sell a May 9th after earnings call, realistically, 125? You get paid $500 for that, which means you would get paid 4.4%. And if you already think 115 is crazy, let's say you sell a 120 call, you get paid $700, which would be 6%, all in a couple of days, all in basically a week. If you want it to be more aggressive, 118, you get 785. You know what I'm saying? Like, yes, but you also have to be okay with losing those shares. And as Robert says, it's not worth it. If you don't want to lose those shares, then don't sell the covered call. And if you do, you might get into a sticky situation, which is okay. You're going to have to be patient and learn how to manage it. It's what happens. But I don't think there's a black or white question. Like Sasha's acting like it's just black or white. It's like, nope, it's overvalued. It's going to fall and it's going to be horrible. It's like, well, that hasn't happened, right? But all the bulls that are saying it's going to go to 500, like that's also not going to happen. So there's a lot of nuances to it, and you can navigate the volatility how you like. But that also doesn't mean it definitively needs to look at pure metrics to determine if the valuation is absurd. And it also doesn't mean that we dismiss the qualitative aspects of the business that get so many people excited about Palantir. Davis says, Hims turned me into a unicorn. Great joke. We're laughing so much at that joke. Karp on his interview yesterday says we are in the infancy. Yeah, I agree. No, I agree when Karp says we're in the infancy. Again, but it's just a question of how do you compare the infancy of growth to the current valuation that is pulled forward, right? In a growth stock, you're paying for future growth. We have pulled forward 600 times the amount of growth in terms of the PE that people are expecting. Does that turn into 800 PE, 900 PE? I don't know, right? Does it go back to 300 PE? I don't know. But I do know I want to be long. I don't want to be selling. I don't want to time it. I bought low and I'm holding for the long term. Same thing with Hood. And if you want to sell covered calls to get some premium and then let some shares get called away, I mean, I know people that had 30, 40,000 shares. Now they have 5,000 shares because they just let it. Their averages from $10 got called away at 115. It's like, okay, they're fine with that, right? They made a good return. And there's other people that never sell covered calls because they just want to keep all their shares. Ultimately, you have to determine which one or how you want to approach the way you think of Palantir. But I don't think anyone should be surprised if we see 140 on Monday. And I know that sounds crazy, but I'm just saying this is no one expected 120 again after getting back to it in February this quickly. No one expected 120 in general when it was freaking $7 2 years ago. But I also wouldn't be surprised if we go back to 85 or 90, right? Like that could happen. And this stuff happens. And so I think we just have to be ready for it. But regardless of what happens, it doesn't change my perspective on the long-term thesis. And by the way, dude, I've talked to management about this. They've publicly said this stuff. They understand how volatile the stock is. They understand that it goes up and down and there's all these different forces controlling it. That's why you saw someone like Peter Thiel sell $1 billion worth of stock at $34. He was obviously, not the best timing because the thing went up to 80 by the end of the year. So they all know it's volatile. They all know it can become expensive or cheap. Karp literally had the quote, sometimes we're overvalued, sometimes we're undervalued. My goal is to just get the business to keep going further. That's when the stock was basically at $6 in the World Economic Forum back in 2022. So they know it can get crazy. They know it can get undervalued. It got crazy in March of 2021 when it was $45 and the company wasn't profitable, doing like $1 billion in revenue. But it got stupid in 2022 when it was $6 worth like $12 billion, and the moat they had was insane. And so I think everyone just has to come to their own conclusion of how comfortable they are losing some of their position, holding some of their position, or allowing the company to continue to grow into the nature of the valuation. One thing I will say is I think Karp has $1 trillion intentions. And so I don't think Karp is happy with where we are. I think Karp genuinely, again, a lot of Karp goes through moments where he has different themes that he focuses on in his interviews. And currently right now, the theme that he has is winning, if you've noticed. He goes through a lot of these different versions of like intellectual, how you would say, I guess, syllogisms, I guess like tangents that he goes on, different ways to describe like the state of it, like for the past year, it was ontology is the course of LLMs. And he was using this metaphor about refineries and oils. Now he's talking a lot about winning and what it means to create a winning culture. Like if you can check all of his interviews and see all these different things that he goes through. And right now the main theme has been winning. Let's just keep winning. And that's because I think he knows that he's winning. Robinhood right here, by the way, below 46 after hours on the day, 45.98 currently right now. So what's the word, bro? What's the word? I need to figure out this word. How would you say it's like he goes on these dialectics? Is that the word? Rants is not the right word for it, but he has these moments where he like every year, there's a couple of them throughout the year where if you look at 2 to 3 interviews in a row, he'll keep using the same metaphor over and over again to try to make the point and to get it to stick. Analogies is maybe the best one. Tirades, ballads, metaphors, phrases, word salads. Yeah, they're like monologues. It's just, he goes through phases where he's focused on one thing and he uses that to get people to realize what's going on. And right now, if you listen to the Ross Sorkin interview, the one he did yesterday, it's all winning. Winning. Themes, that's the best word. Themes. He has different themes in his arsenal that he unloads. And right now, literally like the AIP con, right? He went on this like 2-minute theme of they didn't say we could do this. They didn't say we could do this. They didn't say we could do this. They didn't say we could do this, right? Motifs. That's another better word. And then on the Fox Business interview, he did the exact same thing. Well, Palantir can't do this. Palantir can't do this. Palantir. You notice he's and I noticed this stuff. It might seem nitpicky, but as a communicator, I noticed like, how does he think about communicating? And he likes having these different themes that he goes off on, these riffs, you could say. And I'm sure, on the earnings, he'll have a new one. He'll have different stuff that he talks about. he'll keep imposing that in different ways. But that's what a communicator does. You find new ways to get people's attention because the same story can get boring, and you get people to be inspired. And so I think right now they're in their winning phase. They're in their growth phase of winning. And he's going to keep talking about why winning is so important. Yeah, he even said we got to get to 3 trillion when he was interviewed by Ross. Right? His ambitions are high. His ambitions are absolutely high. All right, cool. I think that's it. First of all, thank you everybody for the congratulations on 70,000 subs. We hit that this morning. Really appreciate it. Means a lot. We started in 2021. We're at 70K. I mean, this year has been pretty exponential in terms of the growth. And, it's cool because it's like when you see a stock and a company and like Robinhood, Palantir, they get that exponential S-curve kind of growth. I've been able to see that over the past year and a half with Twitter and YouTube in terms of audience growth. So it's been really cool. But outside of the numbers, because again, the numbers are just vanity metrics, the numbers are whatever. What matters to me more than anything outside of the 70K, and I don't think I've ever made a big deal or, posted a tweet of, I just hit 100,000 followers. Like, when I first hit 100,000 followers on Twitter, I was going to make a post on it. And then I realized, like, what's the point of this post, right? What's the point of acknowledging this number? Like, what's the relevance of this number? What matters is the people that are included in that 100K, and do they care about you or that 70K? And that's where the meetups, I think, are so important, because the 70K is irrelevant to the fact that 170 people took time out of the day in Toronto last week and actually came to the meetup, So I appreciate all the congrats, but realistically, the numbers are whatever. Is there a real impact on human beings that actually care about it and take time out of their life to really, be part of the community? And that's what I think we're building in a more profound way. So, but the numbers are important because they're a metric to know that there is increased levels of opportunity to get access to having more and more people figure out who I am as just like a human being, enter into my ecosystem, realize that the humor is just unbelievably, profound, and then stay every day. So that's the goal. Tab, thanks for the $10 super chat. What would be the farthest out you'd want to roll the calls for Palantir? My current expiration is May 30th. Whatever you can get to be cheap, right? So like July 18th. I know that's a long time, but you don't want to pay for the debit. So I would pay the minimal debit you can, and probably July would be the farthest I would go out, not further than that. And outside of the subscriber number, because again, the subscriber number is also relevant. Someone could subscribe and then never come back to the channel, right? What matters, at least to me, is the live viewers. And I think that's what matters more, right? And so in the morning, getting around 6,000 people every day, that number I still don't even know how to make. I mean, that number was literally like 100 people 2.5 years ago. And it was 800 in January of 2024 when I started taking this seriously. It was about 800 every day. Now, granted, Palantir and Robinhood both had their journey, and those were the two biggest stocks we covered. So you could kind of see people searching for stuff, finding me, navigating all that stuff. But I think outside of Palantir and Robinhood, going live 2 times a day to build that type of sticky audience that comes back, you just have to be consistent every day and do a good show, every single day. And not every single show is going to be phenomenal, but if you show up every day, A, the algorithm has a chance to show you to more people. That's important. B, if you can make the types of intellectual, how you would say, intellectual remarks that I made this morning. You guys know the one I'm talking about. Off the dome, Meta is raising CapEx. I don't even like dried grapes, but Meta's raising I mean, come on, bro. When you do that stuff consistently every day, it's just hard for people to leave, dude. It's just hard. It's just hard. That was a good one, bro. Saw some of the comments. You're like that. Like, dude, that was decent. That was freaking decent. Especially because I don't like raisins. Raisins are disgusting. Who eats raisins? Who would eat a dried grape? Like who eats raisins, bro? It's disgusting. Like, I've never understood who eats raisins. In like middle school, they would give you snacks and they would have raisins. I would just be like oatmeal raisin. Why does that cookie exist? Oatmeal's fine. Why do you got to put the raisin in there and mess everything? Like, who actually eats a cookie with a dried fruit and chews on it with oatmeal? Like, I've never understood that. Ever. I never got it. Bro, oatmeal raisin is the GOAT. That's ridiculous, dude. Absolutely ridiculous. Okay, Michelle agrees with me. They're trash. Zocol doesn't agree with me. It's ridiculous. But anyway, I appreciate everyone being here. 70K, big milestone, but I think the coolest thing about all this is we're doing all this in real life. And getting to meet everybody in real life and hearing the impact that the content is having, that is what matters to me more than anything. So I'm subbing raisins cross the line, dude. I've never understood the raisin thesis. What is the raisin bull case? Freaking dried grapes, bro. Wine is different. Why you use the grapes to make wine, but like actually eating them, it's wild. All right. Love you all. Thank you, everybody. We'll be back tomorrow on the market open. I will confirm if I put in the security deposit on the apartment on Sunday. It looks like it's happening. I already paid for the application fee. I'm getting it done as soon as possible. I think it's the one. I think it's the one. And I don't want to show you guys it at all. I want it to be a surprise in August, but I really think it's the one. The community within the apartment is so, like, I can't even explain. Like, I got lucky, bro. I got lucky. It was 3 months of hell trying to find an apartment. Really, 5 months of hell. I started in January trying to find this place. May 1st today, I got lucky. I got the tour of a lifetime at the right moment. Like, literally, there was a wait list for my apartment. The guy who was ahead of me took his name off the wait list to go to a not a shittier apartment, but like one on a floor that's way below mine, which means the view is not that good, because he got so annoyed of being on the wait list. And then the girl today tells me a day later, she officially clears the wait list, and I was the second person after him. So when we talk about getting a bit lucky here, I think we got it. So I feel like if we had to go through all of that just to get this apartment, then I got to get this one. I think this is the one. So this will be exciting. This will be exciting. It'll be fun. And yeah, you guys are moving with me. You guys are moving with me. And we're all going to have new experiences there. Also, by the way, dude, like, again, the girl who was showing me around, she was so cool. Like, we started talking. I was like, you should come on a stream one time. She's like, oh, I would love to come on one of your streams. And she was like, do you have any pets? I was like, no, but I want to get a dog. She's like, I have a dog. I was like, you should bring the dog on stream. She's like, oh my God, that would be so much fun. So I think there's going to be some fun collaborations in this new apartment. I think it'll be cool. I think it'll be really cool. It'll be fun. I think we'll be able to expand the content. I want to do the podcast stuff, but I think there's just so many different things we can do, but having your own space to be able to do it, it's just so much cooler, bro. Like, you can actually invite people. Like, no one's going to come to my parents' house in the suburbs of New Jersey, but if I have my own apartment near the city, there's so many ways to just find more collaborations and to take this stuff to the next level and make it really fun. So it'll be super cool. All right, here we go. That's it for me. I will give you guys confirmation on Sunday if we get this deal done, and then market open tomorrow as usual. What about your grinder date? Yes, of course. That will be the running joke when I get the new apartment. What about the grinder date? But are you coming out as dude? You guys, I hope no one actually thinks I'm gay. That you can think whatever you want. It doesn't affect me. I really don't care. My skin is so thick that if you saw it at a club, you would ask for its number. So I don't really care what you guys think, but I'm not actually gay. I know the manicure and the pedicure stuff doesn't help me beat the violations or the allegations. And I also know the grinder thesis, which, by the way, this bad boy, wow, bad boy. See, that's not helping beat the allegations either. But look at this thing, 22, 25. Are you kidding me? We initiated the thesis at 12. I just wish I went heavier, bro. I wish I bought like 5,000 shares at 12. Just for the memes, I wish I bought 5,000 shares and was like, yup, this is my $60,000 play that I'm going to leave there. And we're going to try to make some real money off this stock. But I didn't go that heavy. But if I did, it would have been hilarious. Monopoly on gay dating. Like a monopoly on gay dating. All right, cool. That's it. Yes, pedicure too. 100%. Manicure and the pedicure. You got to do both. We'll be back tomorrow. And that's it. We'll keep going from there. All right, daily recap. We'll be out in a couple hours. We'll go through all of the earnings that we had. And again, thank you, everybody, for 70K. Means the world. Let's keep it growing. And yeah, I think this is a real community. The numbers are the numbers, but the community itself is more important to me than anything. So thank you, everybody. We'll be back tomorrow morning on the market open. Bye, everybody. Have a good one.